bond vigilantes are screaming. Equity markets don't hear them. And I think that this is one of the big questions. At what point does the rise in yields really create concern about the deficit versus just simply, oh yeah, by the way, that's just another sign of growth, and potentially these other issues too, but don't worry about it?
But Lisa, 2 of the 3 reasons are such that the equity market is right not to hear the bond vigilante, to put your word, screaming, because higher growth is good for equities, because the Fed not having to cut rates for the right reasons, which is that the economy is doing well, employment is doing well, that's good for equities too. So it's only the third one, higher debt, higher deficit, higher inflation, that they should worry about. But I totally understand what we're seeing in terms of reaction. When I look at markets today, be it at the broader level, at the headline level, or be it in terms of components, they are behaving very rationally.
At a certain point, you have to wonder at what playbook we're going to in terms of the economic trajectory. We were playing with no landing, soft landing, hard landing. Before this election, something that nobody noticed was the U.S. Services Index that came out, and it was actually much stronger than expected. I don't want to talk about that. What I do want to talk about is this economy looks like it was on solid footing coming into this. What is your fear that we could see a real reacceleration of both economic growth and inflation that becomes unsustainable?
So let me tell you first what the upside is. The upside is you could get supply side improvements, and you could get a faster productivity boost than most people expected. That is clearly on the cards. So if you remember, there was a third scenario. Everybody focused on is it no landing? Is it a soft landing? Is it recession? I kept on saying there's a third one. There's a fourth one. It is bigger but not hotter. And the probability of bigger but not hotter has gone up relative to where it was yesterday. In terms of your question of what can go wrong is that we get the inflation coming much earlier than the productivity improvement. And where would the inflation come from? Mainly the imposition of tariffs. So that's the balance that the administration is going to have to figure out. That's the balance that the market is going to have to navigate.
Yeah, and I think it's trying to navigate it right now. Transatlantic, the divergence we're starting to see. Mohammed, check this out. I've got a German 2-year down 10 basis points. I've got a US 2-year up 11. It's unusual to see things like this take place, and I think trade is the right place to start to have this conversation. The prospect of there being a more inflationary impulse to US policy, and the bottom line being that the Europeans are going to have to eat Chinese overcapacity, take a hit to growth, and the ECB is going to have to cut interest rates. How are you considering the divergence we might see? ECB to Federal Reserve, growth, interest rates, inflation, transatlantic, and what it means for that spread?
Yeah, I remember coming on your show when the market was expecting the ECB and the Fed to cut by the same amount, and I'm saying, what's going on here? These economies are at fundamentally different places. You put it really well in the previous hour when you said the difference with 2016 is that Europe and I would say China are both in a weaker position today than they were then. And that is what the market is feeling, and the market is reacting in that manner. 2 things Europe is worried about. One are the consequences, the spillovers from what happens in the US on them, in terms especially of relative performance. And then the other thing they're worried about is the big sucking sound that the US will have, which is mop up even more of foreign direct investment that's on the move around the world. So this should be a wake-up call to Europe to get its act together on productivity, on growth. And they have the Draghi report that tells them exactly what they need to do.
Well, it is a wake-up call. Olaf Scholz already taking to Twitter just 10 minutes ago saying America has voted, but trying to make sure they're putting out that olive branch, that the U.S. and America have this partnership and friendship. Mohammed, what kind of reciprocal measures could we see out of Europe if we are basically heading into potentially a trade war?
I'm less concerned about a trade war with Europe. I'm less concerned about a trade war with Mexico, to tell you the truth. I think that ultimately that these will be negotiated. Where I think there will be more tensions is with China. And you're going to see that across the board. I think at the end of the day, remember, tariffs, and President Trump said it himself, are used also as a weapon to threaten in order to change behaviors. If behaviors change, then you don't have to impose the tariffs. I think China is a completely different story. China today has got some really difficult decisions to make, including whether they are in a position to implement a big stimulus. I don't think they are in a position to implement a big stimulus. And they've got to have to figure out how to navigate this more difficult environment.
Well, that's interesting because some analysts at Goldman Sachs were basically saying they were waiting on big stimulus, waiting for a bazooka, holding back that firepower because they wanted to see whether or not Donald Trump was going to win. But you're saying it's actually the opposite. Why?
Well, they've been holding on to that bazooka for a very long time. And I always start from the assumption that people are rational. So why would you hold on to your bazooka? And the reason why is your bazooka has unintended consequences that you want to avoid. Your bazooka puts on steroid your old growth engine that is problematic and that you're trying to move away from. So there's a reason why for the last 2 years they haven't used their bazooka. This argument is they're going to use an even bigger bazooka ignores the fact that the Chinese government fundamentally understands that it has to move to a new growth model. So I'm not in the Goldman Sachs camp that we're going to see now a massive bazooka because they're worried about what's going to happen in the US. I think they're going to have to accelerate the reforms they need.
If there is no bazooka that comes on Friday after the result, and meanwhile, American exceptionalism in full tilt that isn't necessarily going to bleed over into the rest of the world, there is increasing fear that this leaves the Euro region getting closer and closer to recession. James Knightley over at ING basically saying that just even renewed uncertainty and trade war fears could drive the Eurozone economy into recession as soon as the turn of this year. Do you agree with that?
I think Europe has problems, and I've been saying this for a while, and they really have got to get their act together. Look, they're going to benefit from a positive demand effect coming from the US. So will emerging economies. So there will be a positive demand effect. They will suffer from a negative price effect coming out of the US, and they've got to navigate that. And they're going to suffer from a negative foreign direct investment effect. So there is a positive effect, but it's not big enough to offset the others. This has just made it even more urgent for Europe to move on the sorts of reform that the Draghi report details really well.
Mohammed, we'll miss you tomorrow afternoon when we cover the Federal Reserve decision. I just want your thoughts on that Fed decision. It's going to be fascinating.
Going to be a great press conference.
What do you want to ask in that news conference? What's your number one question for Chairman Powell right now?
It's not going to be answered, but it is how do you think about the election? That is what I would like to ask. I think he's going to sidestep that question, and he's going to wait. And he's right to wait, because he needs to see what actually emerges in terms of policies.
And then in December, they've got to come up with some forecasts. Good luck to them. Mohammed, it's good to see you, sir. Appreciate it. Mohammed El-Erin of Queen's College, Cambridge, with an update on stories elsewhere. With your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Bitcoin hit a record high as markets watch votes come in for Donald Trump overnight. The largest cryptocurrency topped 75,000. It's widely viewed as a Trump trade because he has embraced digital assets during his campaign. Crypto-related stocks, those are also rising in the pre-market trade. BMW shares, those on the other hand, falling in the German trade, down 6%. It reported its main measure of profitability had fallen to the lowest level in more than 4 years. BMW's costs have risen from a faulty braking system, which forced it to recall as many as 1.5 million cars. It's also dealing with faltering demand in China and Europe. Apple is set to face the first ever fine under the EU's new digital antitrust rules for big tech. According to people familiar with the case, watchdogs are readying the penalty levied on the iPhone maker for forcing app developers to stay within its Apple App Store. Just months ago, Apple was hit with a $2 billion fine for similar abuses under the bloc's traditional competition rules. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, Trump 2.0.
We're going to make our country better than it ever has been. This is a great job. There's no job like this. This is the most important job in the world.
And it's shaking up this market worldwide. From New York City, that conversation up next. Good morning.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine
idea in front of people who can make it a reality.
Imagine
turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
So this can carry up to 20 people, and it can also transport goods. So you can configure it for goods transport within a city or transport of up to 20 people at a time. So this is gonna, the Robovan is what's gonna solve for high density. So if you want to take a sports team somewhere, or you're looking to really get the cost of travel down to, I don't know, 5-10 cents a mile, then you can use the Robovan. Some people call it the Robovan, but so yeah. One of the things that we want to do, and we've seen this with the Cybertruck, is we want to change the look of the roads. The future should look like the future. So, speaking of robots, so everything we've developed for our cars, the batteries, power electronics, the advanced motors, gearboxes, the software, the AI inference computer, it all actually applies to a humanoid robot. It's the same techniques. It's just a robot with arms and legs instead of a robot with wheels. And we've made a lot of progress with Optimus. And as you can see, we started it with someone in a robot suit, sort of down, and then we've progressed dramatically year after year. So if you extrapolate this, you're really going to have something spectacular, something that anyone could own. So you could have your own personal R2-D2 C-3PO. And I think at scale, this would cost something like, I don't know, $20,000, $30,000. Probably less than a car, is my prediction, long term. Now, it'll take us a minute to the long term, but fundamentally at scale, the Optimus robot, you should be able to buy an Optimus robot for, I think, probably $20,000 to $30,000 long term. So, and what can it do? It'll basically do anything you want. So it can be a teacher, babysit your kids. It can walk your dog, mow your lawn, get the groceries, just be your friend, serve drinks, whatever you can think of, it will do.
About tax policy when you talk about spending and what have you.
When you look at, though, his outperformance from his 2016-2020 numbers and how Kamala Harris was not keeping pace where Joe Biden was in 2020, this feels like a mandate for him.
And I think that's right. I mean, and of course, going back to just the tariffs, I mean, he can do a lot from an economic perspective unilaterally. He does not need the Congress to impose tariffs. We already know that from Trump 1.0. In terms of immigration, he can do quite a lot. So will this embolden him in terms of advancing that agenda unilaterally? Absolutely. It just comes a question of what can he get through a narrowly united Congress. Again, he'll have a bigger majority in the Senate than I think most folks had expected, and that bodes well in terms of who he wants for the Treasury, who he wants for Fed, who he wants for other.
Well, that's what I want to talk about. In Washington, D.C., personnel is policy. This morning, Dan Ives, Lena Khan, out, ? The biggest thorn in the side of big tech has been the head of the FTC. Where do you see these kind of positions stacking up? Who does he go to?
Yeah, so Lena Khan is very likely out. Her term, of course, expired several weeks ago, so she is basically a lame duck, so he will just have to nominate somebody and, of course, get them confirmed. That shouldn't be a problem. Similarly, the CFPB is out, the FHFA is out. So some of these other independent agencies like the Fed, very unlikely he can fire Powell, for instance. But for the CFPB and the FHFA, he can usher change just given the structure of those agencies. So again, there will be a big change, even just from a regulatory perspective. So even when we're not talking about legislation or spending or tax policy, what he can do unilaterally is going to be pretty significant.
So basically, you think that a base case is a red wave, but it isn't necessarily as red as it was, so it won't necessarily be as much of a mandate. How much, what is the main question you're hearing from clients right now?
We haven't heard from any of our clients yet. I've heard questions from our traders.
What are your questions from
of course,
traders?
around the night. Well, I mean, we were talking about this last night, too. The curve has steepened a lot. And I think, our view on this in some ways is that the curve should have steepened regardless of who won, just because that they were both going to be bad for the deficits. I think you can argue, and this is a nuance here, so just give me some time, that actually with a Republican sweep, and I'm not sure you call this a Republican wave, but definitely a strong Republican sweep, there could actually be more offsets to a tax bill than there would have been if he had had a divided Congress. And what do I mean by that? You could get pay-fors in terms of rolling back some of the Inflation Reduction Act, sort of scaling back some social entitlement spending. So you actually could get I just don't think this idea, the sort of narrative in the marketplace that he's going to be as bad much worse for deficits under a Republican Congress is necessarily justified.
But there is this question about the cutting, right? And sort of Elon Musk's role in all of this. I think of sort of the Elon Musk proxy as Tesla is surging. And I think about that $2 trillion of budget cuts, basically slashing the government by a crazy amount. Is that crazy, or is that not crazy? Is that something that people are looking for?
Yeah, so that is, well, I'm not sure if it's crazy or not crazy. It's more unlikely just given where the Senate is. And again, even though he has a pretty commanding majority in the Senate, likely, he will not have 60 votes. And this is actually quite important. The filibuster is not going away. You still need 60 votes for most spending bills. So all of the things that Elon Musk was talking about, for instance, would go through an appropriations process. You need 60 votes for that. He won't have that. So could you see maybe some deficit reduction at the margin? Maybe, but it would be very difficult to do something it's significant like that. You just won't have the votes in Congress.
Libby, I want to go back to the polling, only because you actually nailed this, even though you were shying away from it last night. You had said in your notes, and I'm paraphrasing here, but you had said for quite some time, if polling is correct, Trump wins. So polling was, in a sense, to your mind, do you think accurate?
Yeah, yes. I mean, I think that polling was, and I think what we were talking about is sort of this idea of maybe a systemic polling error, whether it was a 2020 or whether it was a 2012. 2012, of course, went in favor of Democrats. 2020 went in favor of Trump. And this was much more a 2020 election for sure. I think that polling more or less got this right? Polling was within the margin of error. Trump absolutely did better. He outperformed where he was polling, but again, within that margin of error. So pollsters probably feel okay this morning. This was not a miss like we saw in 2016, for
Queen
instance.
of polling, though, and
Queen of polling, she was wrong.
So let's talk about the women.
Yeah,
let's talk about this potential pink wave.
Those women did not happen. Those women. Well, those women we were just talking about. Those women turned up. They just turned out for Donald Trump. So I mean that is I think the thing. I think the sort of what she saw, the tea leaves, and she's been pretty good about identifying some of these national trends historically. Not this time. Is that those suburban women never broke.
Where does this Democratic Party go from here?
I mean, that is going to be an open question, and I think it's probably too early for sort of the recriminations and. But I think you're already sort of seeing it on Twitter at least. But I think we'll just have to see the dust will have to settle. I think that folks will be very focused on what 2026 looks like, because the Senate map is actually, not that we should be talking about another election, but 2026, the Senate map is actually bad for Republicans. So I think you're going to try to see a Democrats running candidates who can actually win. I mean, the country has spoken. We are a center-right country, and I think for Democrats to be able to compete in these sort of centrist, purplish states, they're going to have to field candidates who can appeal to them.
I wonder if that's the message they receive, because the people I'm focused on over the next few months are the people who've been quietest, who might become the loudest. Progressives didn't complain about anything, didn't pin Harris down on unpopular things, didn't remind her of what she committed to back in 2019, the press tried. I just wonder how forceful they will be in the next few months, how angry they will be, because ultimately Harris tried to run as a pragmatic moderate, did she not? And it didn't work out.
Yeah, and I think again we didn't really know exactly what platform she was going to run on. I mean, I think there'll be a lot of Monday morning quarterbacking.
Well, we're doing it right now.
I'm just not sure, honestly, if she had picked someone, say, as a running mate who's even more progressive than Tim Walz, and Tim Walz was more progressive, right? He's more progressive than Josh Shapiro. I think
should she have not chosen Josh Shapiro? He's beloved by Pennsylvania, the one state you have to win.
Yeah. Again, a lot of Monday morning quarterbacking here. However, I'm not sure if it really would have made a difference at this point. I mean, he just did. It's just you look at the rightward shift across the country, and maybe picking Shapiro would have helped marginally.
Well, what would have made a difference? Should Biden have dropped out after the midterms, opened up a primary, and actually maybe the Democratic Party could have picked someone who can untether themselves from the White House?
Do you think a moderate would have come out of that process? Do you think a moderate would have come out of that process?
It's a great question.
If they'd had a primary? Give me a break. There's no way that party is going to select a moderate.
You're right, but the one thing that person potentially could have happened, if it was Kamala Harris, she would have been a better candidate. Maybe you wouldn't have the View gaffe. Because guess what? To go through a primary, you become a better candidate. Or they would have gotten somewhere, maybe, Libby. Do you think that could have put some distance between them and Joe Biden?
Maybe, but I just also think, like, the big issue, and we've been talking about this for months, is gas and groceries. It was gas, groceries, and rent. This was a huge headwind for whomever the Democratic candidate was going to be. I mean, I agree, you could say, like, what would the primary process would have fielded a better candidate? Maybe, maybe not. But there was a huge incumbent headwind, and I think maybe the knock on her was, or Biden, was maybe not recognizing just like how inflation has basically been a regressive tax for voters across the country.
Libby, we got to go.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power. This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Equities right now on the S&P 500 up by 2%. On the small caps, the Russell up by 5.9. On the Nasdaq, up by 1.5. Just a phenomenal rally off the back of the nation's decision to give Trump a second term. In the bond market, it means we're selling bonds in yield to higher across the curve. Up by 20 basis points on 10s, up 23 on 30s. And just compare and contrast what's happening in the European bond market. 2-year in Germany, down 9 basis points. Least of the 10-year unchanged on the session. Very different picture.
There's a feeling that the Euro region will be hurt disproportionately by what happens by the United States, by the Donald Trump administration, and that frankly the ECB should be cutting rates more aggressively to offset that weakness. What you see in currency markets just tracks that with the complete plunge. At one point, the most since 2016 in the euro versus the dollar. Here is the question. How much of this sticks? Do we start to see policy that actually underscores this going forward? Or is this something that's going to be considered, in retrospect, a dislocation?
You said at one point, we're back to those levels right now. So euro dollar down by 2.1%. The biggest move potentially since June of 2016, June 24th. You remember that date well? That was the Brexit fallout. Euro dollar negative 2%. A break of 107.
What's interesting, and Mohamed El-Arian had really pinpointed this, essentially this is the same seismic shift in global reordering of power that you could look back to the Brexit vote or potentially even more. And that's really what markets are trying to sniff out right now. And you can see that across the board. You can see that with the dollar stronger across the board, not just against the euro, but the Mexican peso as well with respect to tariffs. And I think that's what people are looking at. What is the new world order and how does it really play into markets?
The peso move is painful. Dollar Mexican peso up by 2.8%. Under surveillance this morning, Donald Trump winning another term in the White House, the former president flipping key swing states, Georgia, Wisconsin, and Pennsylvania. There was just a feeling overnight that this was done and dusted, and pretty quickly.
Yes, definitely so. And the reason more for that is because Donald Trump was outperforming his 2020 numbers, and Kamala Harris was underperforming in key counties where she wasn't even matching what Joe Biden was getting. So you saw the strength almost immediately in the Sun Belt, in places like Georgia. Then he grabbed North Carolina, and then, of course, winning Pennsylvania. It's all over. When it comes to what Libby Cantrell was talking about, we have to still wait on the House. But when it comes to potentially this mandate, Donald Trump's speech last night definitely felt like he had a mandate because the fact that he's winning the popular vote, because the fact that he overperformed last night certainly feels like 2016 when it comes to this market.
It certainly feels that way in a big way, particularly looking at small caps absolutely flying. Let's talk about the Senate. Republicans winning control of the U.S. Senate, giving the party powerful leverage ahead of high-stakes tax and spending battles next year. The House is the Democrats' last hope for power, with the party needing a net gain of 4 seats to take a slim majority from the GOP. This was a high-conviction call, relatively speaking, for most people, that the Republicans would take the Senate, but they've taken a bigger lead than many people thought.
Exactly. The conviction was they take it. The question was by what margin, and we still don't know yet how big the margin is going to be. I'm looking at these races in Pennsylvania, whether or not Dave McCormick of Bridgewater can unseat someone like Senator Casey. Potentially that margin is going to be bigger. When it comes to the House, though, beware, this could take time because some of these absentee ballots out of California could take days, maybe even a week or so.
Libby Cantrell was really brilliant on this when she basically said it sounds mind-numbing, but it matters incredibly for just how much we can really count on the deficit getting bigger. Because essentially, if you start to have a narrower majority, even if it is a red sweep, you don't necessarily get the same mandate or composition that Donald Trump had in 2017 when he took the office last time. That is what I'm watching, not just simply the color of the overall majority.
The bond backdrop is so different compared to 2016. I think we have to keep repeating this as well. The difference is now, between now and then. In 2016, this market was hungry for fiscal stimulus. We were talking about this all the time. The only game in town was the Federal Reserve. We needed to see more from the government. They needed to spend more. That's not where we're at right now. We're in a very different place.
To me, this is the key question, and I think it's fascinating for the economy. How much are we seeing productivity gains? How much are we seeing an acceleration of a recovery that we already had? And how much does that sustain risk assets at a time when bond yields used to be thought unsustainable at levels we're currently seeing can keep going? And that, I think, is one of the key existential questions behind some of the moves we're seeing.
Mohamed El-Arian nailed it yesterday in the FT when he quoted JFK. When it's times of sunshine right now, when the government has that time of sunshine, when you're at U.S. exceptionalism, you start fixing the roof. You don't dig deeper into holes. And when you look at these campaign promises, potentially when it comes to the fiscal deficit, you are digging deeper into holes.
Running a budget deficit of 7% when unemployment's around 4%. We've heard complaint after complaint about that over the last few years.
Okay, I'm not going to beat my drum, but just to quickly give you a little taste of it. I mean, basically, interest rate payments on the U.S. government debt more than tripled over fewer than 4 years. If you take a look, $900 billion of interest payments for this year, you start looking out, that goes up and to the right, significantly, especially if these yields are sustainable.
Beyond the election, we get a Fed rate decision tomorrow. That'll be interesting. The market widely expecting a 25 basis point rate cut. Donald Trump sharing his thoughts on the Fed chair just last month.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
Joining us now is the former Kansas City Fed President, Thomas Hoenig. Thomas, welcome to the program. The former president, now president-elect, says it's one of the easiest jobs in Washington, D.C. Is that job about to get a whole lot harder?
It's going to be harder, but not all that much harder. All these issues were there, whoever was elected. So I think that continues to be their challenge. And their challenge is, as you were just saying, there's a huge deficit. There's a growing debt problem, and the Federal Reserve is unwilling at the moment to speak out and say that is, if you keep that up, we're not going to be able to control where interest rates go, and that is a major problem for any politician. So I think the problems are only going to get more acute, but not necessarily different than what they would have otherwise been.
Thomas, walk us through the process of the Federal Reserve. You've been there. I think we all want to understand what the December meeting will be like. Not this one this week, but in December when they have to put out projections. This market's already making a projection on things like growth, on interest rates, and on inflation for the next year and maybe even beyond. How stale will the Fed projections look in December, given that they have to look at campaign promises but can't do anything with it until it becomes legislative reality? What do you do with that at the Federal Reserve?
Well, remember, those projections are based on what they think will happen, and if they think that the deficit is going to get worse, some of the members will take that into account, and you would see, I think, a change. I think the ones that I just did will be stale. I think you will see a less decline in interest rate, other than the pressure they're going to feel to lower interest rates. But I think it'll be a very difficult period for the Fed to try and outline what the future lies in terms of their dot plots. So I think it's a matter of degree. It's hard for me to say whether they're going to do one thing or another, but I think basically they should show a less steep decline in interest rates going forward, because the debt, I mean, you have to look at what's been promised. I mean, we got tariffs to deal with. We have extension of tax cuts to deal with. That all has impacts on the long-term debt, and that has impact on what the Fed can do with interest rates.
Thomas, how much already is just the move that we've seen in longer-term yields a real warning signal to the Federal Reserve, enough to really curtail any further rate cuts beyond this year?
Right. I think the market is saying that the debt is going to be a major problem. You are not going to be able to control that, even though there'll be a lot of pressure on them to buy that debt to keep interest rates lower. That means inflation. The market knows that, and that's their signaling. What I don't understand is, I think the Fed carefully, but should be making the public more alert to their limits, to the Fed's limits, if we don't get the debt under control.
Let's talk about those limits, Thomas. You were at the Federal Reserve during the financial crisis, during the initial rounds of quantitative easing, where the Federal Reserve did exercise its ability to monetize the U.S. debt. And I'm wondering how high that bar is to do that again if certain people are put into the Federal Reserve, onto the Federal Reserve by Donald Trump to potentially buy more debt, expand the balance sheet, offset some of this increase in issuance.
Well, I think that will be the pressure, because if you don't do that, with the amount of debt that has to be put out there, there's going to be enormous pressure on the Fed to buy that debt, or the rates will continue up. I mean, that's just the fact. And so that pressure will be there, I think, extremely so. But the problem with that is they're supposed to be independent to say no to that and to alert the Congress that that kind of spending and that kind of debt cannot be sustained. And therefore, the Fed is not going to monetize that debt. In a crisis, yes, the Fed will monetize it. But the question is, will they stop doing that as they should? That in their recent history, the last 15, 20 years, they continue their monetary easing well past the crisis. And that enables the Congress to continue to spend without constraint, and therefore the debt continues to grow. So the Fed has to say, we're going to put an end to this, and that is going to be one tough job for any Fed and any chairman of any Fed.
Thomas, if they don't do that, what's the potential consequence? I know you said inflation, but can you give us some sort of range of potential outcomes if there is a greater willingness to monetize some of this debt?
Well, first of all, I think people tend to focus on consumer price inflation, but what is going to happen is asset inflation is going to reignite even beyond what it is today. And you think a house is unaffordable today? Well, look at what's going to happen when they monetize that debt and asset prices go up. The stock market will go further up. The divide between the haves and have-nots will grow in the United States. The Fed has to know that, and that's why they have to put the alert out in a very prudent way. These things can be highlighted by the Fed. That's part of its responsibility, because it's limited in terms of what it can do with a full yield curve under these circumstances of debt growing at these kinds of rates.
Thomas, this was super thoughtful. We appreciate your time. Thomas Honig there, the former Kansas City Fed president, on the outlook for the Federal Reserve. Adam Posen in the Financial Times earlier this year, late summer. Chair Powell should make it clear that the Fed's monetary policy stance could reverse after the election, even if it sets up rate cuts in the coming weeks. He should also remind markets and households of basic economic realities. The argument that Adams made over the past few months is that they should take a page out of the playbook from Governor Carney at the Bank of England. Now, I would caution that once you start playing that game, even if you believe it is sound, economically sound to make these points, you attract the wrong kind of attention when it comes to things like political independence.
I was just about to say that. If he stands up on that podium and he says, well, we don't delve into political issues, but then he starts to give a warning about just what those consequences could be, then all of a sudden, he takes a page from Carney, all of a sudden people are saying, what do you think you're doing? And so it's a very slippery slope. Here's also the issue that we've seen time and time again. The Federal Reserve is not the Bank of England. The U.S. economy is not the British economy. And I think that they're going to have to grapple with and walk this fine line between independence and being economically prudent at a time where we do not have clarity on what economic policies will be.
We're going to be in a really strange place with the Federal Reserve for the next few months. They'll be on a planet over here, and the market's going to be on another planet over here. And we're seeing that play out right now. The market's already taken a view on rates for 2025, away from the Federal Reserve, and the Federal Reserve is not going to be able to talk about it for months.
I remember, I'm old enough to remember, when the Fed worried about tightening in financial conditions. Right now, they don't have to worry about tightening in financial conditions, but they have to reflect that. Why is that happening? At what point does that become a constraint? And if it's not a constraint, at what point does that indicate a much higher terminal rate? At what point do they have to reflect the fact that markets are showing a different economic reality than they were, say, even 2 weeks ago?
Bonds down, yields up. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Some earnings for you. CVS shares are rising in the pre-market 8.9%. Third quarter revenue came in over 6% higher than a year earlier. CVS, though, opted not to give investors guidance for the remainder of the year or for 2025. It did announce a new president for its troubled Aetna insurance unit, facing headwinds on rising costs and decreased government payments. CVS shares have fallen 30% so far this year. Amazon co-founder and executive chair Jeff Bezos sold over 213 million of his shares of his company, according to an SEC filing. Amazon recently reported third-quarter sales that surpassed expectations, an 11% increase from a year ago. Bezos has sold more than $13 billion in Amazon stock this year. And world leaders have congratulated Donald Trump on securing a second term in the White House. Ukraine's Volodymyr Zelensky congratulated Trump on an impressive election victory. French President Emmanuel Macron said he was ready to work with Trump again for 4 years. Leaders from Germany, Israel, Australia, India, and the UK also offered their congratulations to Trump. And that's your brief. John.
Danny, thank you. Jemana covered this a little bit earlier. What did Ukrainian bonds do? Rallied.
Yeah, exactly. And so there's this question of, do you get some sort of resolution to this sooner? I mean, the fallout effects from this are massive, and some of that was actually a move that was a bit counterintuitive, I think, from what some people were expecting.
Seismic changes potentially. That was the words of Mohammed Al-Arian, I'm paraphrasing, but ultimately the message from Mohammed a little bit early this morning, about 40 minutes ago. Up next on the program, a big repricing in the bond market.
The 10-year Treasury right now is above that fair value estimate. So for me, it's not a done deal that a red sweep results in out-of-control spending.
That conversation up next, live from New York. You're watching Bloomberg TV.
You missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Mornings like this are really rare. Stay tuned. Check this out. Up 2.4% on the S&P 500. In the FX market, a move we haven't seen on the euro, going back to 2016. It's a break of 107, 106.90. In the bond market, yields a whole lot higher, up 17 basis points, 4 44. Under surveillance this morning, a big repricing in fixed income.
We had to reprice for higher growth, maybe for some higher inflation expectations, and maybe for less rate cuts. But we've done that. The 10-year Treasury right now is above that fair value estimate. People worry about what does a red sweep could potentially mean for budget deficits. But I think there are a lot of Republicans in Congress that actually do want to rein in budget deficit. So for me, it's not a done deal that a red sweep results in out-of-control spending.
So here's the latest. Treasury yield surging to 4-month highs as the bond market braces for Donald Trump's return to the White House. Joining us now to discuss is Vishy Tripator of Morgan Stanley. Hey, Vishy, welcome to the show, sir. What a move we've got in fixed income to start this conversation with you. I want to understand, first of all, have you changed your mind about anything in your outlook for fixed income based on the results overnight?
I think we are processing. I would say the best thing to say is that we are processing a lot of the change that's happened and still awaiting whether it will be a red sweep or not. That's still we are processing. I think the thing that we are spending the most time thinking about really is sequencing of policy. So we had imagined that under a red sweep scenario, what are the potential things that could happen? We would think about I would put that in sort of 3 buckets. Tariffs, immigration, changes to immigration policy, and changes to tax policy. I think a lot of the conversation you've just had focused on the deficit expansion and the tax policy. We think that actually takes time. Even under a red sweep scenario, legislation is a messy process. Lots of interest groups are involved, lots of details, and then we still don't know it's a red sweep or not. But even in the red sweep scenario, we think the thing that could happen most immediately are the tariffs. It's consistent with the first term, what he did in the first term. It's consistent with the campaign messaging to the entire campaign, and it's something that does not require a congressional approval. So we think really sequencing-wise, that is we think will be the first order of impact. So even there, are we going to see across the board all the tariffs? Are we going to see some tariffs that actually grow over time to, say, 60% for China? We don't quite know yet. And those are the kinds of details I think the market will have to come to terms with, and what the potential impact of tariffs would be on the economy and on inflation. And before really digging into the effect on the deficit expansion, which will still, as I said, will still take time.
Well, let's pick up on that last point. I think we can explore guardrails and regulating forces. Vishy, do you think that this bond market will act as a regulating force on the tax cuts, hopes and dreams of the Republican Party?
To be honest, we don't know. We think it's possible that we've seen the bond markets do some of this in other countries. Clearly, we've seen that happen in the UK. But I think the bond market will have to evaluate what the effect of this on both on inflation and on growth from tariffs, and how do that interlink with the deficit expansion under the new tax policy. I don't think the market quite knows this yet. I think the market will have to come to terms with these competing issues, and that is going to take some time. So I would consider some of the knee-jerk reactions that we are seeing may get reevaluated.
Vishy, the real issue to me is that you say the knee-jerk reaction needs to get reevaluated, but the knee-jerk reaction is fascinating in that even this massive climb in yields at the long end has not at all diminished the trade that we're seeing in small caps, in bank stocks, in across the board, some of the more pro-cyclical aspects of risk assets. And I'm just wondering whether we have to rethink what a neutral rate in this society is and this economy currently and the trajectory that it's headed on.
I won't push back on that. I think we have to rethink a number of things, including what you just said. I think how do we price in the animal spirits, and how do fixed income markets react to that? So I'm thinking as a credit person primarily, I'm thinking in terms of credit likes moderation, and what we may end up having is more than moderation. And if we have a high level of if interest rates or yields stay elevated, that will start putting some pressure on the parts of the market that some of the interest coverage ratios, etc., will be challenged. So the way I'm thinking about this is that how do animal spirits play out in the bond market? It's not entirely clear at this point, but I'm a little concerned that from a credit investor perspective, the animal spirits may benefit more of the equity investor versus credit investors.
Interesting, especially at a time where potentially there are certain companies that haven't yet refinanced. But that's what I want to ask, Vishy. Haven't we basically just stress tested all these companies? Aren't they going to be able to manage through? Haven't we seen that?
Yes, we have seen that, but we have seen that in two different ways. I think if you've seen the fixed rate borrowers, whether it's investment grade or high yield, we have not seen a lot of the pressure testing into those companies because they had issued a lot of debt in 2020 and 2021. So they didn't have to deal with a lot of pressure on their higher interest expense. That didn't really show up because they're fixed rate debt. That did show up. Where it did show up was in floating rate borrowers, leveraged loan borrowers, where we did see the effect of higher rates really put pressure on rating down rates, interest coverage ratios, and defaults, etc. So we have not seen the fixed rate borrowers experience that incremental. They have not been stress tested in that sense because they had locked in higher level of rates.
I think for a lot of us still staying awake, Vishy. We've all been stress tested for the last 12 hours. Got to leave it there. Vishy, thank you, sir. Vishy Tripatur there of Morgan Stanley. I want to make an observation. It's not a forecast, okay? It's an observation. It's not a forecast. What we're seeing in the market right now, let's start with what we're not seeing. Yes, we should be talking about deficits and whether it will constrain what's happening in the bond market, the hopes and dreams of policymakers in Washington. But I don't think you're seeing that fear around the deficit. And I'll tell you why, and I can point directly to foreign exchange. The dollar's stronger, like really strong. I think the point you can make purely from an observation, looking across markets right now, is what we're seeing evidence of is a positive growth shock. In the United States of America specifically, small caps outperforming, financials rallying, yields higher across the curve, including at the front end.
I would completely agree. I think in addition to the currency, you can also say the Russell 2000. That typically has underperformed when yields went up. This time around, it's the opposite, and that really points to what you're saying.
We'll see if it sticks. It's just an early observation and certainly not a forecast because I'm not in the business of providing them. Up next, a man who is, Jay Pulowski of TPW, Bloomberg's Ed Ludlow, Torsten Slok of Apollo, and we'll catch up with Gennady Goldberg of TD. From New York, this is Bloomberg.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
So this can carry up to 20 people, and it can also transport goods. So you can configure it for goods transport within a city or transport of up to 20 people at a time. So this is gonna, the Robovan is what's gonna solve for high density. So if you want to take a sports team somewhere, or you're looking to really get the cost of travel down to, I don't know, 5-10 cents a mile, then you can use the Robovan. Some people call it the Robovan, but so yeah. You know, one of the things that we want to do, and we've seen this with the Cybertruck, is we want to change the look of the roads. You know, the future should look like the future. So, speaking of robots, so everything we've developed for our cars, the batteries, power electronics, the advanced motors, gearboxes, the software, the AI inference computer, it all actually applies to a humanoid robot. It's the same techniques. It's just a robot with arms and legs instead of a robot with wheels. And we've made a lot of progress with Optimus. And as you can see, we started it with someone in a robot suit, sort of down, and then we've progressed dramatically year after year. So if you extrapolate this, you're really going to have something spectacular, something that anyone could own. So you could have your own personal R2-D2 C-3PO. And I think at scale, this would cost something like, I don't know, $20,000, $30,000. Probably less than a car, is my prediction, long term. Now, it'll take us a minute to get to the long term, but fundamentally at scale, the Optimus robot, you should be able to buy an Optimus robot for, I think, probably $20,000 to $30,000 long term. So, and what can it do? It'll basically do anything you want. So it can be a teacher, babysit your kids. It can walk your dog, mow your lawn, get the groceries, just be your friend, serve drinks. Whatever you can think of, it will do.
Electoral college votes to seal a return to the White House. Jay Pawlowski of TPW Advisory is back with us. He was with us, what, 6 hours ago, Jay? It's good to see you again.
It's nice to see everybody.
I feel so bad to start with this, but you made a really bad call on this election. Harris landslide. What went wrong?
Well, thank you, John. I appreciate that. It's a nice way to start the conversation. Always love that.
No elephants in the room here.
Well, look, right, I mean, my thought is it's a good thing we're not paid to be political prognosticators, because we were of the view that the Democrats would win. Women vote, abortion, youth vote, etc. None of that really materialized. And what's really interesting after a few hours of sleep is the idea of good economics has turned into bad politics for the Democrats, right? The Biden-Harris administration, best economic outcome in generations. The U.S. is the envy of the world, best growth, lowest inflation. And the Trump policy mix, which I think economically speaking is going to prove to be not very good, but was clearly good politics. And so as an investor, here we are sitting. We need to think about exactly what we just discussed. You know, is it going to be a sweep? Because that means the policy mix, more of it is likely to materialize. If it's not a sweep, then we'll see how it all plays out. But I think for us at TPW, we're focused on a long cycle opportunity, good global growth, good risk asset opportunity, and a lot of that depends on policy continuity. And I think what we're going to have in the U.S. is clearly policy discontinuity, and the question is going to be, how does that play out? And the setup I'm thinking about, like right now, this morning on the way in here, was you have the U.S., which is an over-owned, expensive asset. Foreigners have never owned more of U.S. financial assets at a time when the policy mix is deteriorating versus, for example, China, which is a cheap asset, under-owned, just to finish, cheap, under-owned, and arguably the policy mix is improving. City Economic Surprise Index turning up, PMIs above 50, and I think we're going to see at the end of this week a further policy response by China, because they understand that their growth right now is export-driven, and with tariffs, that could be a big problem.
I wasn't trying to interrupt you, but before we get to China...
I don't like that.
Don't interrupt you.
John can criticize me, but no interruptions.
He hasn't slept. I've wound him up. So ready to go.
It's okay.
All right, it's a third down and fourth down. How much do we need to get?
There's a question.
Give it a vote.
There's a question here about whether you're going to fade this move. If you believe that actually this is not the right policy, do you put your money where your mouth is?
Well, that's a great question. And I thought about that. And tactically, I think you have to enjoy the bounce, right? And the reasons are multifold. First, seasonality. This is the best 3 months of the year for stocks. Positioning is pretty light, right? You're seeing that play out. Right? You don't have 5% moves, 2% moves in the S&P if everybody's already long. So people de-risked. Now they have to re-risk. Technicals are supportive. And importantly, most importantly, fundamentals are supportive, right? We're just coming out of Q3 earnings. They were double what the expectation was going into the earnings season. The projection was 4%, ended up being around 9%. And most importantly, I think we've seen a complete collapse in the VIX. That's what needs to be up on these charts here for Bloomberg, right? The VIX has gone from 25 to 15 in a matter of hours. And
2 hours on TV last night. He's producing now.
I need a new job, John.
I want that up on the screen. Let's go.
I need a new job.
Political forecasting, he's producing.
Yes, exactly.
You got some sleep.
Something's got to work.
Now you think you could just take over. So your tripolar world, even though your political conviction was wrong, your market conviction, in a sense, was accurate.
Yep, exactly, which is, it goes back to what I said last night. Remember my mea culpa, I think it was 12:50 last night, was, what, do you want to be, the old market saying, do you want to be right or do you want to make money, right? And I struggled with that for years because my background is a sell-side strategist, and so you want to be right. Really important as a sell-side strategist. As an investor and an advisor, we want to make money. And so we're fully invested. We're long equities. We are completely out of treasuries, so this treasury move is not affecting us in any way, shape, or form other than helping us beat our benchmark.
What would it take to get back in?
Yeah, you know, that's good. That's, again, the question to be asked, I think. And, you know, it's a little tempting tactically, again, because as I said last night, going into this week, the long end of the treasury market, as represented by ETFs, was massively oversold, right? The RSI, Relative Strength Index for the 7 to 10 year ETF, IEF, was 15. They don't really get down around 15 very often. So tactically, I think you're probably I wouldn't be a seller if I were as an owner of treasuries right here, the long end. But I think the bigger question is the deficit. And clearly, again, the Trump policy mix is not just my point of view. Pretty much every independent person who looked at it, or group, Moody's, Goldman, Peterson, et cetera, it's bad for inflation. It's bad for the deficits, bad for rates, and theoretically should be bite for growth. But I think there's an idea that this is going to be a hothouse effect, which is what you guys have been talking about.
So what are you looking for to decide whether or not to bite the bullet, sell stocks, buy bonds?
Yeah, part of it is to see the makeup of the house. Is it a trifecta? Part of it is to kind of like see what China does, right? Because there's going to be a response. You know, we're global, we're multi-asset. So we have the whole world as our oyster, and there are going to be opportunities to play. I think for now, as I said, we enjoy the bounce, we enjoy the ride, and we think about, you know, at some point maybe lightening up. I think for the U.S., I mean, I think the call for us is going to be, if we really do believe in the tripolar world, competition between China, the U.S., and Europe. China has taken the high ground in the clean energy space. You know, Trump wants to end EVs, et cetera. The real fight now is AI, and I don't see that this is, you know, the two countries are separating their tech stacks. That's our whole thesis with China tech. And, you know, I think the issue right now is, do you want to press that bet, right? So you reduce the U.S. And you go further into Asia, which has been down 5 weeks in a row, is cheap and under-owned. I mean, those are the things you want to play.
As you say, he wants to end EVs. Tesla's absolutely soaring today.
Well, that's the Musk thing.
Who do you think is the biggest loser in terms of your tripolar world with this composition we see in Washington?
The U.S., clearly, because Europe has got to respond. They know that. The whole Draghi report on competitiveness was we got to do more of the things that China and the U.S. are doing. And to us, there's a new industrial policy mix that is being implemented around the world. To compete in AI, to compete with climate mitigation, to compete in conflict, you need public-private partnership, because it's too much money for the private sector alone, and the public sector doesn't have the expertise. So who can marry that best is going to be the winner. And I think you also have to think about immigration. Who can leverage the immigration to improve their growth profile is also going to be a winner. And in the policy mix that the Trump team has laid out to date, it's anti pretty much all of that. And so, you know, strategically, as I said, the U.S. dollar is the most over-owned, it's expensive, and the policy mix, in our view, is deteriorating.
There's a lot to unpack there. I just want to pick out a few things. The former president, now president-elect, has been quite clear that he wants national champions, which is why there's the proposal on the campaign to drop the corporate tax rate to 15% with conditions for domestic manufacturing. Now, you said, when asked who's the biggest loser, you said the US, and then you said clearly. It's a clearly piece of it that I'm going to push back on, because it's not so clear to a lot of people watching the program right now. You acknowledge that at the moment, I think you called it a hothouse theory right now in America. That's what it feels like. It feels like if you're investing in America, you'll do well. If you're trying to export to America, you might have a problem. That hothouse theory, what's the biggest hole in the window right now?
Well, I mean, I think it's J.P. Morgan who laid out the case that if Trump implements the 60% tariff on all China imports, that will lead to almost a halving of the earnings growth that's expected for 2025. In other words, the earnings are expected to grow by about $35 next year from this year, 25 to 24. The tariff effect will carve out $15. This is J.P. Morgan's estimates. They got, you know, reams of economists thinking about this stuff. And so you're basically talking about taking your earnings growth and halving it at a time when, you know, you're not going to get multiple expansion. So it's all about the earnings growth. Year 3 in a bull market tends to be the year of rest. We are going into year 3. That's historically the case, typically single-digit returns. And so I think that the idea of national champions, sure, that's why Tesla's probably rocking. Musk is going to be one of the national champions. But I think overall, the whole thrust of the U.S. policy mix has been reshoring, right?
Got it.
And reshoring with the dollar getting more expensive, Those two things don't compute. So that's a big hole in my view.
I'm going to suggest those JP Morgan economists aren't too unhappy this morning. The stock is up by 6.5% in the pre-market. Jay, it's good to see you.
Likewise.
And seriously, appreciated your time overnight and this morning.
Yeah,
Thank
it's
you,
been
sir.
great. I mean, one of the things that's great about this is that you have to think in real time, right? So by coming on and engaging in this debate and dialogue, you know, it makes our process better. And so we appreciate it. And good luck to everybody, and hopefully the next time we see each other, we'll all have had a little bit more rest.
We'll see you soon.
Yeah,
Jay,
exactly.
thank you, sir. Jay Pawlowski there of TPW Advisory. With an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. The Arizona Abortion Access Act has passed. The state will now amend its constitution to establish a right to abortion and prohibit interference before fetal viability. Arizona is one of 10 states where abortion rights were on the ballot this election cycle. Shares of the U.S. biggest banks, as you mentioned, John, are surging pre-market. Investors are hoping President-elect Donald Trump will make good on his promise to lower taxes and reduce regulation for the industry. The shares also getting a boost from higher yields this morning. During the campaign, Trump vowed to cut the corporate tax rate to as low as 15% from 21% and to eliminate 10 regulations for every new one. NVIDIA became the largest company on the world on Tuesday, surpassing Apple and underscoring just how dominant AI has become on Wall Street. Shares rose 2.9% during yesterday's trading session, resulting in a market cap of $3.43 trillion. That tops Apple's $3.38. The chipmaker accounts for 7% of the weight in the S&P 500, and it's responsible for a quarter of the benchmark's 21% gain this year. That's your Bloomberg Brief. John.
Danny, thank you. More from Danny in 30 minutes' time. Up next on the program, the morning calls plus this. Tesla up by close to 13% in the pre-market. We'll catch up with Bloomberg's Ed Ludlow in just a moment. From New York, this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
So is there some tension here? Check it out. Equities up by 2%. In the bond market, we're down. Yields are higher by 16 basis points. For how much longer? Max Kentner, HSBC. If Treasury yields were to rise into what we call the danger zone, a point at which higher, longer-end expectations can trigger a broad-based sell-off, such gains may prove short-lived. That danger zone, 450.
Stuart Kaiser of Citigroup echoing that, although he didn't put a number to it. There are two risks to the equity rally. One of them is deterioration in the U.S. labor market, but the first is that further surge in that term bond premium. So here's the question. When do you hit that peak? Is it 450? Is it more? Does it depend on some of the policies coming with it?
We're getting closer to that. Let's put it this way. Let's get you some morning calls as well. First up, Bank of America downgrading Universal Health to neutral. viewing Trump's victory as a negative for healthcare facilities. That stock is down by close to 8%. Your second call from Bank of America, downgrading 5 below to underperform with a $75 price target. The analyst citing exposure to China and possible Trump tariffs. We're down by more than 13% on that name. And finally, Barclays lowering its price target on Yum Brands to 155 as its brands increase focus on value. Turning to Tesla, the stock surging in the pre-market as Donald Trump secures a return to the White House. In a speech to supporters, the president-elect praising the carmaker's CEO, Elon Musk.
Let me tell you, we have a new star. A star is born, Elon. Now he is. Now he's an amazing guy. We were sitting together tonight. You know, he spent 2 weeks in Philadelphia and different parts of Pennsylvania campaigning.
Joining us now for the latest on the West Coast, Bloomberg's Ed Ludlow. Ed, we missed you overnight, buddy. I want your thoughts on the election and what this all means for not just Elon Musk, but for the companies he runs and owns.
Well, I was awake and I've spent a lot of the night on the phone, as you'd imagine. And, you know, it's not just the alignment between Elon Musk and Donald Trump. You know, it's essentially an endorsement of Elon, right, by Trump on stage, the president-elect. But the potential policy platform that Trump brings, you discussed with your last guest, the winners and losers of this outcome. You know, Tesla's strategy as a global company kind of fits the idea that Trump would want to have conditionality around manufacturing in this country. Tesla, for quite a long time, has had this policy where it wants to manufacture in the markets that it sells into. In other words, don't build cars in America and sell them into Europe. Don't build cars in Europe and sell them into America. But I guess one thing we should talk about is what is Elon Musk going to do himself? The assumption of sources that I've spoken to, and it's an assumption, it's not known, is that any role within a Trump administration or federal government role would be advisory. And what I heard from people overnight is that the plan internally in all these companies is that Elon Musk remains at the helm of them, which I think is a really interesting idea.
Well, yeah, Ed, and that's one of the main question marks. How much can he be the beneficiary if he has to sell out his shares or freeze them and then leave? There are a lot of issues here. There's one with SpaceX and how much that could take over some of the space program in the United States as Boeing and NASA take more of a back seat. And then there's a question about the electric vehicle policy. There is a broad feeling that Donald Trump will be terrible for electric vehicle policy, considering some of his prognostications about it. And yet here you see the shares of the biggest electric vehicle maker surging 14% on the heels of this. How much will the policies of Donald Trump and his next administration help just Tesla or the broader market?
Well, for every winner, there is a loser, right? And yes, Tesla is up significantly, but I look to the European automakers, how significantly lower they are in that European session, going back to the same logic that if President-elect Trump were to move forward on the idea of tariffs on imported vehicles, the way that that company is organized, Tesla, it would set up to be a beneficiary in that market environment. You raise so many interesting points. Space is highly regulated, but SpaceX is the contractor of choice for the U.S. government and its activities as it relates to space. And I think one area that Musk has pushed back on consistently is that Tesla or SpaceX in either context are not that dependent on subsidy. I think we could debate that, right? There's definitely evidence in periods of this year where the federal tax credit, $7,500 on EVs, has helped Tesla lease a lot more vehicles. But again, they would push back as a company and say, we haven't taken handouts. We've done a lot of this ourselves organically. The forecasters, be it Bloomberg NEF, Bloomberg Intelligence, the sell side, whatever, they all do feel that under a Trump presidency and Trump term, there will be some repeal of the Inflation Reduction Act and other EV-related policy. Very hard to call.
Ed, on the campaign trail, the former president said, Elon Musk is one of our geniuses, and we need to protect our geniuses. If he had one ask from the U.S. government, he runs 6 companies, what would it be?
Yeah, proceeding on the basis and the assumption that a role in the Department of Government Efficiency is advisory and that this is not becoming some sort of formal U.S. institution. I think that, you know, looking at clues, Musk would seek for things to move faster. The belief where I am, Silicon Valley, is that the reason President-elect Trump was the right candidate for technology was that he would deregulate, cut red tape. And if you think about the direction Tesla's headed, robo-taxis, autonomous driving, the biggest barrier right now is rules and getting vehicles on public roads. And as we discussed, Anne-Marie, a few weeks ago, and I've written about, Musk talked about that quite explicitly on Tesla's last earnings call. And that might be one ask. Make some rules or cut some rules for the future of autonomous driving.
Do you speak to these automakers all the time? Do they face federal hurdles or state-level hurdles?
Both, but remember, the risk can be a tailwind. It works both ways. That take California, for example, or other state-by-state specific manufacturing policy, that's helped some automakers. Rivian, for example, is highly supported by the state of Illinois. But again, it is difficult. I think one complaint that I hear from CEOs, and honestly, if the CEOs of the automakers are watching and you know who you are, speak about it publicly, is they've been very frustrated with the organs of federal government and how little public officials understand about supply chain. So for all of the legislation, be it the CHIPS Act or the Inflation Reduction Act, actually getting money out of the legislation and into the system has been very hard for them, as has been sort of navigating the ability to access raw materials. China is something we haven't really talked about, but we could talk about a bit more, given how critical it is for supply chain and end market as well. The point is those CEOs are frustrated and have been for the last 4 years or so.
We've got months. We've got 4 years to talk about China. Sure. And I just want to squeeze this in, just quickly. Where is he going to find time for this? Where will Elon Musk find time to do all this?
Very fair, reasonable question. Simply, he spends a lot of time on his cell phone and on his jet, which is Starlink Wi-Fi enabled. He doesn't sleep very much, by all accounts, and you can see that from his social media presence. I think that he's just one of those people.
Just incredible. Ed, thank you, sir. Appreciate the update from the West Coast, and looking forward to your coverage alongside Caroline Hyde at 11 o'clock Eastern Time on Bloomberg Technology when they go through some of these issues. What a phenomenal character. We're talking about some of the biggest companies on the planet. If you could own one and run one, that would be a win. But we're talking about multiple platforms now.
SpaceX, Tesla, X, the AI company he's starting, and now he's potentially going to have this advisory role. So here's the question. At what point will the policies just benefit him versus the broader industry? Because what you're seeing right now is auto manufacturers in the U.S. actually getting a little bit of lift, not like his. But it doesn't seem to mean, at least in the market's eyes, that this is going to be wholesale terrible for car makers that make EVs in the U.S.
I just want to know where this $2 trillion he says he can cut from the U.S. government is coming from. Because even if you fired everyone in the U.S. government, you're not saving $2 trillion.
Up next on the program, Torsten Slok of Apollo, a man who thought the Fed would pause in December. I imagine he feels pretty good about that this morning. We'll speak to Gennady Goldberg as well of TD Securities.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
So here's the first upgrade. Chris Harvey, Wells Fargo, raising the price target on the S&P 500 to 58.30, which is close to where we are, from 55.35. They say sell the news is over, buy the election. The pain trade is a rotation. Let's talk about what's happening on the small caps. Absolutely flying going into the opening bout. The Russell right now up by more than 6%. With some movers this morning. Manus Cranny, take your pick. There's so many. Good morning to you.
Jonathan, it really is take your pick for the Trump anonymous trade. You spent a little bit of time on Tesla. And I think what you've got to do here is sort of say to yourself, this is the very personification of FOMO. But you need to disaggregate between the emotional part of this trade, in other words, the affiliation between Trump and Musk on the campaign trail together. A new star is born, and the financial. And I think Dan Ives tries to do that this morning. He says that this is a $40 to $50 boost for Tesla from pricing and scale. If you've got the president's ear, how much of the EV-related provisions are actually going to be rolled back? And that's about access to conversation, which creates policy. Roll it over. Go to the banks. Why not? It's probably what we do best at Bloomberg. Bank of America, it's a mere representation of JP Morgan, Wells Fargo. This is about capital, status quo, and deregulation. We don't really know what kind of deregulation you may be going to get, but capital status quo, that is very, very different. And what Bloomberg says is you can stave off the 9% capital increase. You get a watered down version of that. That's the bid side. The offer side is, of course, higher yields. What does that do to your mortgage? What does that do to your customer out there in the United States of America? It certainly boosts your NIMs. And I leave you with a soupçon of Coinbase. Bitcoin smacks out that record high, but I like what the CFO had to say, not what I like, but what he said. Foster crypto innovation over litigation. Mike Novogratz goes for $100,000 on Bitcoin by January, and Bloomberg's brilliant line to close it off, Jonathan. Crypto's political muscles, they're strong.
Manus Cranny, appreciate it, sir. Thank you. Let's turn to bonds as well. That's an equity picture. Bonds are sliding. I think that understates the move. Yields are higher by 17 basis points. The 10-year, 4.44.52. The Trump trade gripping markets this morning worldwide. Tomorrow, attention turning to the Fed rate decision. Torsten Slock of Apollo expecting a 25 basis point rate cut, adding, quote, we don't expect the Fed will cut interest rates in December. Torsten joins us for more. Torsten, good morning.
Morning.
I'm not sure if you've been to bed, so let's start with the election. Good night, good evening, wherever you want to go. I want to understand whether this has changed anything for you or just cemented what you were already thinking.
Well, I think, of course, what always comes with elections is that now we need to figure out what policies are actually going to be implemented. It's clear that yesterday at around just before 9 p.m., we found out what the Trump trade really was, namely that rates were going higher, the dollar was going up, and stocks were going up. So from that, of course, we can derive that, well, if this continues, it does, on the one hand, mean easier financial conditions because of the stock market going up, but it also means tighter financial conditions because long rates are going up. So now the challenge for markets is to figure out, why are long rates going up? Are they going up because of the economy expected to be better, or are long rates going up because of worries about fiscal sustainability? And this becomes a very important debate, namely, what will the term premium, meaning what will happen to the part of rates that, in long rates, that have nothing to do with Fed expectations. So therefore, the conclusion is that we still need to wait and see what policies actually will come.
Which one do you think it is, and why? Where's the tell?
If I look at my Bloomberg screen and the term premium coming both from the San Francisco Fed and the New York Fed, they both say that the term premium in the last 6-7 weeks has been going up more than 50 basis points. So that's telling you that rates in the long end are going up for reasons that have nothing to do with Fed expectations. So now it becomes, therefore, a little question about, okay, so if rates are going up for reasons that have nothing to do with Fed expectations, what could those other reasons then be? And traditionally, one interpretation has been that markets do focus on fiscal sustainability. And given that both candidates have been scored by the Penn-Wharton budget model and the Committee for a Federal Responsible Budget, that we will have more deficits both under Harris and under Trump. One interpretation has been that rates have generally been going up in the last month or a little bit more because of renewed worries about the fiscal situation.
That said, this morning what we're seeing is small caps ripping. What we're seeing is some of the consumer cyclical stocks ripping, some of the lower rated credits actually doing very well, which actually flies against this idea that it's going to be tighter financial conditions that constrains the economy. Instead, it suggests something about growth reaccelerating. Are you saying that this is an inconsistent response from the market, or can you take that as sort of a signal here?
Well, for small cap in particular, absolutely rates higher for longer is negative, because let's remember that 40% of the Russell 2000 have no earnings or negative earnings. So that means the Russell 2000 companies are characterized by having low coverage ratios, meaning very little earnings to pay for the interest payments. So that's, of course, negative for small caps. What's positive for small caps is likely, first of all, we may get now get more growth, but also from a regulatory perspective, if we now have that the Republicans are going to, at least as the market textbook would say, create an environment that is, in the market's language, more business friendly, well, that would also be a reason then why small caps should now be benefiting. So there's a tug of war going on between tighter financial conditions, meaning higher interest expenses, and at the same time, what could be characterized more tailwinds to the business environment.
I'm trying to get my head around this because I want to understand how the Fed's going to grapple with this tomorrow and how Fed Chair Jay Powell is going to signal about yields going higher on the long end that ostensibly should be tightening financial conditions, but aren't, if you see ISM services like what we saw yesterday, but aren't if you see what we're seeing in the employment market. At what point does it become a concern? What are the red flags to you?
Exactly. So that's why tomorrow is easy for the Fed. December is really difficult, because now we get to the very difficult situation that we already, even before the election, had ISM services going up really significantly, including the employment component. We've all been assuming now for several quarters, oh, employment is slowing down, non-farm payrolls will gradually weaken. But then suddenly we began to see, of course, in September, non-farm payrolls went up. October was distorted by the weather. But if we get a payback from the weather in here, the data for November, and on top of that, we're already seeing ISM services for employment also going up. The challenge for the Fed is that both organically, if you will, the economy is actually still in a good spot. And now you have some questions about, well, what type of policy will come? Will we have more fiscal policy? Will we have, therefore, more support to the economy? That will then become the challenge for them in terms of what they should be doing in December.
Well, Torsten, the highly regarded Cook Political Report just put out a note saying the most likely outcome now is a GOP trifecta. Former Speaker of the House, Kevin McCarthy, just texted me saying the Republicans will keep the House. This is someone that knows the House very well and also knows those California districts very well. So if there is this trifecta, what policy can actually get done?
Well, so now we go all back and look at the Penn-Wharton budget model, which had a quantification of what would be the implications for GDP of the potential here of a red sweep. And the answer to that is that we will generally see a boost to the economy. We will probably also see some boost to inflation, which will certainly complicate the Fed's job. So that's why it remains to be seen what of the things that Trump has talked about he will be implementing. But if we do get a red sweep, then certainly we should be going back and studying hard what has the quantified models been showing in terms of the implications for the economy.
How does Jay Powell talk about this tomorrow?
Well, it's a very difficult challenge for him here, because obviously if we agree that tomorrow is easy with 25 basis points cut, then how do you start to talk about including this in your forecast? I think that one way that he might begin to talk about it is to say, well, we just don't know what exactly will happen. We don't know which of these policies will be implemented. So we have a list of things that Trump has talked about, and they have all been quantified by a number of different institutions. But what of these things will actually come through, and in what order of magnitude, becomes a very important issue, of course, for the Fed.
We can play around with this a little bit. Does anyone start auditioning to take Chairman Powell's job?
Well, as we all know, his term will run out in May of 2026. So now we will already begin to have, in the second half of next year, a debate about who should be the next Fed chair. And of course, this will also become a very important part of discussion in markets.
We're going to have it right now, aren't we? Doesn't that debate start right now?
100%, especially because what we were talking about with Thomas Honig, I think we cannot emphasize enough. The tools that the Fed has are not just cutting rates. They also are quantitative easing. They also are bond purchases at a time where there's a real question about the long end. And I wonder how long before we start talking about that.
Torsten, just one final question. How similar is this to 2016 when we were waiting for the tax cuts to come from the Trump administration? And we're having similar conversations with Fed officials. I remember the news conferences. I remember the Fed speakers at the time. It was, at what point do you start to bake this into your projections? And they had to wait until it became reality. Is it much worse than that? Is it the same? Do you see some parallels here?
This is very different because at the time we had two policies. We had lower taxes, the TCJA, the Trump tax cuts, and then we had at the same time tariffs. Now, we don't have significant tax cuts, at least not of the same magnitude. So if the tariffs are now going to be even bigger than what we had in 2017, then you can begin to wonder, well, if we don't have the offsetting effect that tariffs will, generally speaking, lead to higher prices and, generally speaking, the risk of lower sales, there was an offsetting positive effect to the lower sales part by the tax cuts, and we don't have that magnitude of tax cut potentially. There are some suggestions that he's talked about lowering corporate tax rates to 15% for domestic manufacturers, so that could maybe offset some of it. But given what we're talking about on the tariff side is so much bigger than what we had with 60% on China, than what we had in 2016, that means that the risks are more tilted towards tariffs potentially playing a bigger role.
This is the beginning of a much longer conversation, but just a final word. 2025 rate hikes? You ready to go there?
Well, if we now get a tailwind to growth from a better business environment, from easier fiscal policy, and we might also have a little bit higher inflation because of tariffs. If we deport illegal immigrants, that might also be lifting wage inflation. That would all be arguing for the Fed definitely not cutting as much as the dot plot is telling us at the moment.
Torsten Slok of Apollo, one of the very best. And the market and policy is moving in his direction, that's for sure. Torsten, thank you, sir. If you are just joining us, welcome to the program. In about 50 minutes from now, this market will open up and small caps will rocket. Equity futures right now on a Russell up by more than 6%, on the S&P 500 up by more than 2%, on the Nasdaq 100 up by 1.8%, and in the bond market, we've got to look at that too. Check this out. Yields higher by 18 basis points on a 10-year, on a 30-year up by 20, 464 on 30s, Lisa approaching 450 on 10s.
Just ahead of a $25 billion auction of 30-year notes at 1 p.m. today. A real question, as Priya Misra of JP Morgan says, these are clearing events. They are risk clearing events where we can find out the new price. Does this stick? Do the buyers come in? If they don't, does that change the tenor of how people look at this as almost a benign sell-off in bond prices with yields going higher simply because there is the expectation of something of a growth shock?
On the bond market, jumping into the seat, Gennady Goldberg of TD Securities. Gennady, it's good to see you.
Thanks for having me.
Bonds are on sale. Are you buying?
I'm waiting until they stabilize a little bit. I think at these kinds of events, you know, you said market clearing event, and it's certainly going to be one of them. We have to wait until this plays out. We have to wait until the market settles down into a new equilibrium. Then we could think about jumping in. I think at this point, rates could continue to edge higher until we know the extent of Trump's policies. And that might take a little time as well, because we still don't know exactly who won the House.
Given that, how unfortunate is the timing that they're selling bonds of 30-year denomination later today?
I'll put it to you this way. I think the Treasury will probably not make this mistake again. That being said, you know, they've done it in the past. Yeah, I'm sure they'll take a note. But, you know, I think they'll be still somewhat bought. I mean, I'm not expecting a massive tail at this auction. But if there is weakness here, it could suggest that maybe we shouldn't be scheduling auctions for election days. It is tricky, though, right? It's hard to concentrate this series. It is the big one, theoretically. So, it's, you know, every 4 years, you're forced to do it.
There's a real question, especially as the dust settles, about what of these knee-jerk reactions will actually stick. And the point that John was making earlier about the divergence between the European bond markets and the U.S. one is just really surprising. You see bond yields actually declining across Europe. You see bond yields surging in the U.S. At what point do you buy into that? Do you expect that to widen? And at what point is this, again, a moment where something else is going on? You don't want to get involved.
I think you always want to wait a couple of days for things to shake out, especially big election events like this. Markets have trouble pricing election risks, period, right? Historically, they will adjust until kind of the right level. I think the issue here is twofold. One, we still don't know who won the House, so we don't know the extent of potential tax cuts, potential fiscal policy. Two, we still don't know what the impact is going to be on tariffs, on immigration. You know, these are all things that Trump has said in the campaign. The question for investors now is, how seriously is he going to take them? You know, tariffs are easy. Tariffs are really up to the president. The immigration part has to take a lot of work, a lot more work. I think that might involve Congress to some extent. So if he doesn't actually win Congress, it could make it a little bit more difficult. And that is one of the swords that's kind of dangling over the market in this uncertainty. So we still have to wait for these things to shake out before we can actually see the real damage.
But we know what he wants to do on tariffs. And Trump 1.0 moved in quickly on tariffs. Maybe not as big as what he's talking about now. Is it enough to make moves on?
I think the tariff side is likely, right? So if you're looking at the extent of Trump's policies, tariffs are quite likely. The big question for us is immigration, because that could actually be quite a bit more damaging for the next several years, not just for next year. You know, we're talking about a 10% tariff across the board. We're still not entirely sure whether it includes the USMCA as well. You know, that might just be a threat and might not materialize. But if we're talking about, you know, mass deportations, as Trump has talked about, that could be huge for the labor market, which has actually now come into much, much better balance, and actually could be inflationary for wages. So it could put some long-term price pressures on the economy.
Nobody knows what's going to happen. What we're doing around this table is just pure scenario analysis. Does the Federal Reserve need to do the same thing publicly?
I think it's a little too soon for them publicly. Tomorrow is going to be an exercise in saying nothing for about 45 minutes at a press conference.
And reading the notes.
And really reading the notes and trying to repeat themselves. And to be fair, they also don't know, right? They have to wait for this to shake out. I think a November cut is effectively a done deal. December still very much up in the air, really depends on the data. Once you start getting into next year, once you get past the inauguration, and, you know, to the earlier point, Trump 2.0 is going to act a lot faster than Trump 1.0. We have to see what's coming. There is a risk, certainly, and I think the risk coincides with some of the stronger data we've been seeing. They may want to take their foot off the brakes a little bit.
They've got a bias to ease. Have we just disrupted that?
I think we've softened it, is the way I would put it. I think the Fed is still moving in the direction of easing. Now we've thrown a major wrench into that, major source of uncertainty. They'll have to see how it plays out. All else equal, I think they still keep taking rates lower. But even with the data the way it's been, it's still not as fast as it would have been before.
I'll finish with the same question that I asked to Torsten Slok at the end of the interview, and hopefully you were listening. Rate hikes 2025. Are you ready to go there?
I don't think so. I think a much more likely scenario is Fed on hold for a lot longer than anybody anticipates. So let's say the first 6 months, the first 8 months of next year, maybe even all of next year, if the economy is still doing well and we're getting inflationary pressures. I still think rate hikes are a long ways off. That would be quite different from what they're doing. Not impossible. I think the market will start to price in some chance of that, but I still think cuts over hikes.
Let's see how quickly this conversation changes as we make our way into 2025. Gennady, it's good to see you. Thank you, sir. Gennady Goldberg there of TD Securities on the bond market, on fixed income, and on the Federal Reserve. With an update on stories elsewhere, here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Hurricane Rafael is gathering strength in the Atlantic Ocean. According to the U.S. National Hurricane Center, the storm has sustained winds of 90 miles an hour. That makes it a Category 1 hurricane. It's expected to make landfall in Cuba later today. The Florida Keys could also see localized flooding, according to the National Weather Service. Bitcoin hit a record high as markets watched votes come in for Donald Trump overnight. The largest cryptocurrency topped 75,000. It's widely viewed as a Trump trade because he embraced digital assets during his campaign. Crypto-related stocks, those are also rising in the pre-market trade. Democrats are holding out hope that they can avoid a complete red sweep and take control of the U.S. House. Democrats need a net gain of just 4 seats to wrestle the slim majority from Republicans. But with several key races still too close to call, particularly in notoriously slow counting California, it could be days before it's clear which party has the majority. And that's your brief. John.
Hey, Danny, thank you for this morning and overnight as well. We appreciate it, Danny. Thank you. Up next on the program, we'll set you up for the day ahead. From New York City, you're watching Bloomberg Surveillance.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Minutes away from the opening bout. I'm exhausted already. We've got a full day of this ahead of us and a Federal Reserve decision tomorrow. Equity futures on the S&P up by 2%, bond yields higher by 16 basis points, a 10-year 443.54. As we count you down to the opening bout, here's the trading diary. The next couple of days looks like this. Tomorrow, a Fed rate decision plus another round of jobless claims, plus a Bank of England rate decision too on Friday. UMich consumer sentiment on Tuesday, earnings from Home Depot Wednesday. US CPI data next Thursday, PPI, plus earnings from Disney. Dropping by the studio, Bloomberg's Michael McKee, our economic and policy correspondent. Mike, good morning to you. Can you give me an impression of Chairman Powell tomorrow in the news conference with you? What is this going to look like? What's it going to sound like for 60 minutes?
Well, they only go about 45 now, which is a benefit to him because he's
maybe this
one
goes 30.
We don't know. They don't know. I think they do the 25 that they've basically told us for this month, and they were never going to really commit to another 25 in December because they're looking at a lot of mixed data lately, and they could say, we'll wait and see what the data say. Now they're going to have to wait and see what policy is going to be. I mean, there are definitely some Trump proposals that would throw, to use a British expression, a spanner in the works for the U.S. economy, and they don't know what that's going to mean to them. So it's going to be a lot of bobbing and weaving and ducking and dodging.
So I can do an impression for you. I was thinking about this morning. Basically, we look at the data we have, we respond to it. There is a moderation in the labor force. We have seen that inflation has moderated and seems on a downward trajectory to our 2% goal. So we are on a path to cut rates incrementally, but we will evaluate data as it comes in. Key question I'm curious about. How do you interpret the long end of the yield curve rising so significantly? How concerned are you about what that signals if it does tighten financial conditions at a time where you think that this economy is fragile, and if it doesn't, about where the neutral rate is?
Well, that's going to be an interesting question for the Fed to look forward to, and I think in December you're going to want to read the minutes because they'll have a much more deep discussion on that, and then in 5 years we'll get to see what the Teal book said, but they'll lay out all of their thoughts, and as they go forward into January and March meetings, they'll be talking about this more and more and trying to divine what it means. But with the long end going up, if you look at break-evens, that's what's driving it. It is inflation concerns, and that's one of the key things for the Fed is inflation expectations. So we get Michigan sentiment on Friday, but it's
I think we got the Michigan
it's
sentiment.
it's not going to tell us much about inflation because of the limited amount of time in that survey. But that's something to watch in the
Marie,
future.
that was
too.
good.
Mike,
I like that.
Well, we did. I mean, we're waiting on the House, but I'm hearing many people think potentially it's going to be a trifecta, reading the tea leaves. Trump told Bloomberg News that Powell could serve out to the end of his term of May 2026, quote, especially if I thought he was doing the right thing. The right thing from the former president, real estate mogul, is low interest rates. His policies may dictate something else.
Yeah.
How does Powell deal with this?
Well, he ignores it as much as possible because that's the only thing he can do. He can't respond to the president, or he just risks creating a market reaction that's going to be a lot of problems for him. He will get the questions tomorrow, no doubt about it, and he'll say, you know, our job is to focus on the economy, and I'm not going to comment on anything Trump says, but you can't believe anything Trump says. So if he says he can serve out his term, he may change his mind and decide, I want to try to fire the guy. Who knows what would happen then? We all end up in court, but who knows?
I've refined that point. I don't think you can believe anything anyone says on the campaign trail. And that's the problem that you've got if you're a policymaker trying to set policy on campaign promises.
Yeah, although there is a market response, and there is some sort of read-through that you have in a knee-jerk way. And on one hand, you can say, we look at the economy, but on the other hand, there's like a dumpster fire behind someone, and they're like, there's nothing to see here. The data is going to come out. At what point do they feel forced to actually have some sort of comment?
This was a fast and furious Trump sweep. This was 2016. You have to think Jay Powell last night and this morning was thinking, I wish it was 2020. I wish I can go into this meeting and say, we can't comment because we don't know. They do know, and they do have an idea of how Trump 2.0 will be because they can look at Trump 1.0.
Michael McKee, it's good to see you, sir. We're going to leave it there. We appreciate it. Thanks for catching up with us.
The dot plot's out the window, put it that way.
Yeah, we'll get a new one of those in December. I'm not sure how useful that's going to be. We'll have special coverage of the Fed decision and Chairman Powell news conference starting at 1:30 tomorrow on Bloomberg TV. We're going long once again. Tomorrow morning, we'll catch up with Laurie Calvasino of RBC, Stuart Kaiser of Citi, Binky Chada of Deutsche Bank, and Dana Peterson of the Conference Board. The comeback kid, 78 years old, from Queens, New York City, the 45th President of the United States, poised to become number 47. President-elect Donald Trump. From New York City this morning, good morning. This was Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Who are your most trusted advisors today? Is it Ted and Todd? Is it Greg and Ajit? Is it your wife, your children? And what do you value about them? Thank you.
Well, it depends whether they're advising me on money or on other things. I trust my children and my wife totally, but that doesn't mean I ask them what stocks to buy. I was, in terms of managing money, there wasn't anybody better in the world to talk to for, many, many decades than Charlie. And that doesn't mean I didn't talk to other people. But if I didn't think I could do it myself, I wouldn't have done it. To some extent, I talk to myself on investments. I think my children have gotten a whole lot wiser over the years, and so I listen to them on a lot of things. I'll listen to my daughter on who to vote for locally because she knows a lot more about that than I do, and I'll listen to my wife on a lot of things, and I won't get into details. So it is important. I mean, you don't 20s of being able to have people I trusted around me, and I've made mistakes occasionally, but they filter out over time. You learn, and when I found Charlie, for example, in all kinds of matters, not just investment, I knew I'd have somebody well, I'll put it this way, you can think about this. Charlie, in all the years we worked together, not only never once lied to me, ever, but he didn't even shape things so that he told half lies or quarter lies to sort of stack the deck in the direction he wanted to go. He was.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Is in the small caps. It's pretty amazing. You see the Russell 2000 right now just absolutely ripping up nearly 6%. You think about the biggest sectors here. We're talking financials, we're talking healthcare, and that's what's in the limelight today. But of course, it's a cross-asset story as well. We go to the bond market and we see 10-year yields up 18 basis points on your 10-year Treasury yield. We are knocking on the door of 4.5%, of course. Investors betting that, of course, a Trump administration will mean more spending, more tariffs and lower taxes, and maybe more inflation. Meanwhile, you take a look at the VIX. Of course, we had seen that run up in the run up to the election, but now some volatility coming out of this market. Your VIX below 16, and gold, obviously not a big search for havens right now. Gold down about 3%. Matt, I haven't even gotten to currencies.
Yeah, I think currencies really show the domination of the U.S. dollar against our trading partners. Take a look at this chart. This is the WCRX chart on the Bloomberg terminal, and you can see that against every single major currency, we're seeing huge moves for the greenback. The Mexican peso absolutely devastated. And the euro, by the way, its biggest drop that we've seen since at least the pandemic. So huge moves here, and a lot of banks are calling euro parity soon.
Yeah, it's incredible to me that even with those drastic moves, those banks, trading firms are seeing more pain for the trading partners ahead. In addition to sectors, we're going to talk about certain stocks moving this morning. Watching DJT rising now more than 26% pre-market after Trump won the election. The market cap has been testing that $10 billion mark. Also watching Tesla now up almost 12% pre-market, higher because, you know, it's Elon Musk, of course. I think super genius is what he was called, helped propel Trump back into the White House. Finally, Coinbase up double digits on the hopes that a Trump administration will welcome crypto adoption. Coinbase now up almost 13%. Bitcoin flirted past that $75,000 mark. And Senate also, Matt, has a lot of pro-crypto candidates in it as well as it turns red.
Yeah, absolutely. I'm watching very closely the House races because if the Republicans can keep the House, you have a full red sweep and they can enact the kind of tax legislation that Donald Trump wants to. They can roll back things like the Inflation Reduction Act. And as a result, I mean, that's why we see, for example, the 30-year bond, the long bond right now, posting its biggest drop since 2016.
Yeah, big steepening underway in the yield curve. And it's interesting that you're seeing this big risk-on move, even though investors have been telling us for months that they want a divided government, but obviously not holding back any markets right now. And it's interesting, we talk about this Trump trade. It took off at 7 p.m. last night. We know that the prediction markets, the betting markets front ran this move, but even in the traditional financial markets, before we had any clear results, we were ripping.
Yeah, what's incredible to me is you saw that move really take off at 7 o'clock, and then you also saw it extend quite drastically, even throughout the course of this morning, the 10-year alone just hitting almost that 4.5% level. My question is, if you start to hit those levels, how much do you start to have a new narrative here? Decoupling here from the realities that we had faced in the past. Why that move we're seeing, I think, is something we should be exploring throughout the course of this show.
And when do you see dip buyers? We had auctions yesterday. I mean, life still goes on, even though it's a presidential week. People showed up, investors showed up at those treasury auctions, but you're not seeing it necessarily right now.
If you were gutsy enough to short the 10-year in September, can you imagine how much money you've made?
Yeah.
Yeah, absolutely. And we have an auction today as well, 30-year auction coming up at 1 o'clock this afternoon.
Yeah, that will absolutely be
Is there a meeting tomorrow?
Watched.
Is there
There's a Fed meeting
gathering?
tomorrow. I hear that Fed officials are meeting in Washington right now. Their two-day meeting kicking off a decision tomorrow. But let's get back to the news of this morning. U.S. President-elect Donald Trump spoke from his campaign headquarters in West Palm Beach, Florida, earlier today.
I will not rest until we have delivered the strong, safe, and prosperous America that our children deserve and that you deserve. This will truly be the golden age of America. This is a magnificent victory for the American people that will allow us to make America great again.
And let's stay in West Palm Beach now, where Bloomberg's Felipe Marquez has been following the Trump team. And Felipe, I see you're back in your hotel room right now, but we were talking about how that Trump trade took off at about 7 p.m. last night. When did celebration start in Trump HQ? When was it apparent that they were confident they would win?
I think it was a little later to 7 p.m. People trickled down all night. I mean, I stayed through the end of it, through the end of his speech. I think it was really the turning point when we started seeing some of the results for Pennsylvania. We started seeing him like with a solid lead on some of the swing states. I think that's when you could feel the room being charged. Also, another important thing is yesterday there were two different parties. There was one party in Mar-a-Lago and there was the Convention Center party. At one point they unified. So when people were brought together, you can see the temperature in the room change.
All right, Felipe, thanks very much. Felipe Marquez has been up all night reporting from West Palm Beach, Florida. Hopefully you can get some sleep. Let's bring in Jay Hatfield right now. Hopefully well-slept and refreshed, founder and CEO of Infrastructure Capital. Jay, what's your take, first of all, on the resounding win from Donald Trump? It's really an historic victory.
Good morning, Matt. It's great to be on. Well, absolutely. It reminds me of the Reagan sweep. And I think the policy changes will be almost as profound as that development. We, however, were bullish on the election because of the math in the Senate. And so we initiated, to demonstrate that, we initiated a target on the S&P next year at 6,600. But this red sweep to us implies a cut in the corporate tax rate. We're estimating 18% effective, so it might be through deductions. So we're raising our target to 7,000 next year, at the end of next year, which pre-open would be up 20%. So we think it's highly bullish. It's a rejection of the socialist policies that were pursued under the Biden administration, super bullish long-term. And also keep in mind, we do have a Fed loosening cycle and an AI boom. So it's really a troika, and we're hyper bullish on the stock market.
Jay, one interesting thing Katie and I were just mentioning earlier was the extension of the trades as the morning has gone on, and it became more clear that the Senate would be red, the House, of course, is still in balance, but you look at the bulls underpinning the stock market and the bears underpinning the bond market. And you have to wonder, at what point do those things catch up to each other next year?
Thanks, Shanali. Well, that's really our biggest non-consensus call. I mean, obviously everybody agrees with our view that this is bullish for the market, or even super bullish for the market, with the small caps up 6. But we think that after elections, most of these trades get overdone. A good example His solar stocks surged when Biden became president and then fell off 65%. So we think this Treasury sell-off is massively overdone. We don't think the Trump administration is worse for the budget deficit because it's pro-growth, number one, and maybe they don't do it, but they're talking about actually cutting spending. So we actually think it's better than a Democratic administration. And everybody ignores monetary policy. There's global rate cuts going on. This Fed is super tight. The monetary base is declined actually almost 1% over the last year. And inflation is headed to zero in our models.
Interesting.
So we have a total non-consensus call. And we agree with you, though, if rates keep rising, the housing market's going to roll over, the economy's going to slow. And by the way, our target starts to look ridiculous because our 7,000 assumes, or even our 6,000 at year end, this year end, assumes a 350 Treasury. So at 450, the fair value would be down like 1,000 points.
Jay, let's talk about inflation headed to zero in your models, because you think about the argument for why yields are screaming higher at the long end. It's because inflation is going higher. But an interesting note out from Neil Dutta this morning saying that, you know, gold is down, so is oil. Maybe inflation isn't that huge risk that everyone is worried it is right now. It seems like you would agree with that argument.
Well, absolutely. And we've been far more accurate about predicting inflation than the Fed has. I think Matt knows this because we have a simple model. We look at the 70s. Inflation is almost exclusively driven by loose monetary policy. And I mentioned we actually have a shrinkage of the monetary base and oil price shocks. We also have very low oil prices and ultra low natural gas. Plus, we just mismeasure inflation because of shelter, but that's finally rolling over. So if you mark inflation to market using shelter, market rates for shelter, PCE core is below 2, headed to 0. Autos are rolling over. That's a huge portion of the inflation right now. Last 12 months is auto services. So we think our models is what really works. You normally don't need to focus on monetary policy because it's relatively stable, but during this cycle, it's been highly volatile. It created the inflation, it tamed the inflation, and it's continuing to tame the inflation with the monetary base not growing at all.
I mean, you referenced my knowledge of your inflation forecast because I'm a fan of your index. CPI-R is accessible on your website, infracapfunds.com, and I think it would behoove a lot of people to check it out. What about the policy that Trump has campaigned on, however, Jay? I mean, do you not believe he's going to wrench up tariffs as much as he has threatened? Is that just, you know, a real estate guru's first bid? And do you not believe he's going to have mass deportations, move 15 million workers out of this economy? Because if those two things happen, you've got to believe inflation is on the up and up.
Well, you know, first of all, rally speeches are not policy, so we'll see what actually happens. But particularly with tariffs, I think people are way too negative about tariffs with regard to inflation. Inflation is ongoing increases in pricing. Tariffs create a one-time increase. There is revenue. It's really a partial sales tax, which is very bullish for growth. If you tax consumption and cut investment taxes, that's super bullish for growth. We saw that in 2017. So this whole notion that tariffs alone are going to increase inflation is inaccurate, particularly if you don't specify what's happening to the proceeds from the tariffs. And mass deportations, a lot of the recent immigrants aren't even allowed to work. So I'm not confident that I wouldn't assume that that's going to be highly inflationary either. And it's also difficult to execute on. So we think that's all overblown, that I wouldn't ignore 56 trillion of pension assets growing at 5.5% globally. There's going to be a massive rebalance at the end of this month and quarter because the treasury market has crashed, really. Stock markets have surged, so that rebalancing will occur. So there's a lot of bull cases for bonds that nobody's discussing, which makes sense because the obvious short-term trading is to trade on the red wave, but we're longer-term bullish, and we've made these kind of calls. We made the call when treasuries were at 5, And we saw the data path, and we see a similar data path where inflation is going to continue to cool. Housing market's probably going to cool if we stay where we are now. So we're confident in that call, but it's highly non-consensus.
Jay, we thank you so very much for joining us today. That is Infrastructure Capital's Jay Hatfield. Now, among the many sectors moving today, we're going to check on the banks pre-market because you're seeing some stunning moves in the shares of Goldman Sachs, JP Morgan, for reasons that we've talked about before, that steeper yield curve being one of them, but also the prospect of lighter regulation as you see key Senate races flip, as you see the White House also turn red, and the House still in balance, rather. Fascinating, of course, expectation of more M&A as well into next year. We'll talk more about it later in the show. But coming up next, we're going to dive deeper into the battle for Congress. Democrats are struggling to maintain their power in Capitol Hill. This is Bloomberg.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Our principles, our policies in support of the Palestinian people will never change. Our policy in having a two-state solution will never change, and nothing will compromise it. And as long as we are, having the capability to be helpful, we will do it. We did that between Afghanistan, between Taliban and the US. We did that between different parties in Lebanon and Sudan and others. And that's basically the core of our foreign policy. It's been built based on mediation, on trying to help in resolving conflicts between the party. There are countries or people might not like it, but we don't ask everyone to like it, just to understand it.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
After losing the White House and the Senate, the House race is still open in Washington. Here's a look at the races with Zach Cohen. He covers Congress for Bloomberg Government. What is still in the balance, and how long will it take before we know the real outcome?
Certainly the fact that Republicans slipped the Senate is a major victory for that party. They'll have at least 52 seats in January, with victories in places like West Virginia, Montana, and Ohio. Which will give them the power to move any number of incoming President Trump's nominees for the executive cabinet agencies, as well as for the judiciary, where they had a lot of success during Trump's first term remaking the federal bench. The House is going to take a little bit more time to call. There's a number of outstanding races in places like California, which notoriously counts its ballots very slowly. The same goes for Arizona. I've been watching in particular a border district that is too close to call at this juncture, as well as one for one of the tax writing committee subcommittee chairs, David Schweikert, waiting to see how that race gets called. And so it could take a couple of days. It took over a week, in fact, for Republicans to learn that they had flipped the majority in 2022, and we could take a number of days before we know whether, in fact, Republicans have won complete control of Washington next year.
You know, we thought last night would be a tough race to call, Zach, and it was pretty clear by the time I went to bed at 10 o'clock that Donald Trump was going to win. At least you could see in the betting markets that, you know, buying Kamala Harris only costs you 7 cents and you win $1. So can you tell in that way, can you see from betting markets, from financial market reaction, where it's going to go?
Well, certainly the presidential race always has a key impact on the down ballot effect. You know, the Senate map has always been tilted toward Republicans. Republicans have been very confident that they would actually flip the Senate majority because Democrats had the narrowest of majorities and were defending seats in states that Trump had won previously. The House, part of the reason why it's taking as long as it is because some of these races are being called in states or in districts, rather, that either Biden carried in 2020 or are some of the main battlegrounds in the states. You know, Michigan remains uncalled, for instance. And so how voters go to the polls and then vote not just for president, but also for the House has an impact down ballot and ultimately gives the next president either a very wide or very narrow latitude to implement their legislative agenda.
All right, Zach, really appreciate your reporting. I know there's still a lot of work left to do. That is Zach Cohen of Bloomberg Government. Meanwhile, let's talk about where the markets go from here as a result of this election. We'll break it down now with Bloomberg's Alex Semenova. Alex, I want to start with the small caps. The Russell 2000 absolutely ripping higher. Some of this must come down, of course, to the makeup of the index. You think about financials, healthcare having a big representation in that index. But talk us through the small cap trade, the bull case right now.
Yeah, so an astounding move really on that index, up as much as 6% in futures trading. And of course, this has to do with, Trump's proposals of deregulation benefiting some of these smaller companies. But a really important thing to note as I'm talking to strategists this morning is that this burden of financial costs that small cap companies face isn't suddenly going away overnight. So this move is more of kind of a temporary knee-jerk reaction to us clearing this hurdle of uncertainty, to investors getting a winner much faster than they anticipated. And also small caps have tended to do well in the weeks after elections. Data from Jefferies actually found that the Russell 2000 index has advanced an average 7% in the 8 weeks after an election decision in election years. So,
well, we did that in one day. Not even before the market opened, we've done it.
That's for now, Matt. We'll see what happens, though, as kind of reality hits. And of course, the move higher in yields could potentially be a problem for
bring that over to the large caps as well, because if you're an investor trying to choose and you're choosing on valuation here, you have those same worries, as you mentioned, about the small caps, about the leverage, especially when you look at where the 10-year's going. But what about the large caps and maybe a lesser threat here of regulation among them?
Right, so we're seeing actually big tech is performing slightly, not as good as some of the rest of the market is today. It's lagging actually, yeah. And that's because we're seeing this rotation into sectors like small caps, which often comes at the expense of some of the winners, some of the leadership that we've seen for much of this year. So investors really exploring other areas right now. Up until recently, tech has of course been a defensive play. Investors have been piling into that sector kind of because they're familiar with it, because of the sturdy balance sheets, but now it's more risk on mode.
I think you bring up a great point in terms of rates. I mean, this rally is fun to watch for sure, but if rates stay this high, just like Jay Hatfield was saying, and just like you just said, it's going to be a real problem for these small caps.
Well, inflation's going to zero in his model, so maybe not higher for much longer.
Exactly. Well, I mean, look, why would we rally this high on an index that has so many money-losing companies? They need to borrow money. Anyway, Alex, great to have you on. Thanks so much for joining us. We're going to continue to focus in on the reaction in markets to the Trump win. We're seeing a huge rally in stocks. We're seeing a massive rally in the dollar. We're seeing yields soar across the curve. And really, the long end is where you see it the most. So a big steepening as well. It's been a pretty incredible set of results to watch post-election.
One question I have is, where do those tax cuts matter the most as well? Because that's what people are starting to factor in a little more as well. Now, more markets and election coverage heading up to the opening bell. Stick with us. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asia markets.
All right, welcome back to our special coverage of election 2024. Of course, Donald Trump is the new president-elect, and you take a look at how markets are reacting, and it's a risk rally. You can see it in the S&P 500 up over 2% pre-market. Interestingly, the Trump trade isn't a big gain for tech, at least relatively speaking. Of course, the NASDAQ 100 up by about 1.7%. A lot of bulls would not say no to that, but that's not what's leading. The star of this show, of course, is the small caps. The Russell 2000 currently higher by 6% pre-market. Our conversation, of course, was just on how long that can last. Typically, you see small caps rally after an election, and that's certainly what you're seeing now. Of course, you take a look at the cross-asset action, a lot of action in the bond market, a big sell-off underway. The 10-year Treasury yield up 20 basis points, volatility draining out of the equity market, and not a haven bid to be found. Not in the bond market and not in gold either. Gold down about 3%. We'll talk about all these moves coming up with Stephanie Guild joining us from Robinhood. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. and someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
A stunning victory by Donald Trump and potentially a red sweep this morning, driving assets in a risk-on fashion like you never would have believed it. The S&P futures are up 2%, but we have Russell futures up almost 6%, the biggest move in the 30-year bond since 2016. Bitcoin at an all-time high. It hit $75,000. It's unbelievable. That was the opening bell. You see the Academy Geopolitical Intelligence Group down on the New York Stock Exchange. I'm looking for Peter Cheer. I think that's his gang down there. In any case, they're ringing the bell there. Down at the NASDAQ, you've got Tipro ringing the bell, but no one really cares about any of that. It's all about this face-ripping rally, Katie Greifeld, that we're watching in risk assets.
Yeah, let's put some numbers to that face-ripping rally. On the S&P 500, up nearly 2%. Of course, just 30 seconds into the trade. You can see big tech sort of lagging here, but still up 1.7%. The star of the show is your small cap space. The Russell 2000 currently higher by about 4%. We got higher than 6% at one point pre-market. This, of course, is a trade, a dynamic that started at 7 p.m. last night, clearly maintaining its momentum and building into the cash trade. And as such, let's talk about DJT, of course, surging on that Trump win, up 25%. This company actually reported earnings yesterday. They're still losing money, but of course we know that that's not what this stock is trading on right now. DJT shares currently up 26%, Shanali.
Right off the highs, but still on top of a 94% surge this year. Also watching Tesla here, up 12.7% as the market opens. Remember, Elon Musk is seen as a major beneficiary of Donald Trump's return to the White House, has been a huge supporter. We'll talk about that more in the show, Matt.
Yeah, absolutely. A focus point, because Elon Musk, donated, I imagine, at least as much as any other massive non-American billionaire to Donald Trump's campaign. And yet Donald Trump doesn't seem to really care much for EVs. I wonder how he feels about weed. Tilray is a pot company that is actually almost decimated today after Florida voters rejected a ballot measure to legalize recreational marijuana. You can see the drop now, almost 10%. Let's take a closer look at some of the election stock moves with Bloomberg's Abigail Doolittle, because there's a lot to watch, Abby.
There really is. It's pretty stunning in terms of the moves that we're seeing. A real risk-on rally. Markets love certainty, and now they know who the 47th president of the United States will be, Donald Trump. Stocks higher, the S&P 500 up 2%. The Russell 2000 at the highs had been the best day in more than a year. Take a look at Bitcoin, record high, up 7.4%. And then bond yields surging higher. That means bonds are lower. And that, of course, all of this really not just a reflection of certainty, but that Trump trade, the idea that Donald Trump's economic policies will be helpful to the economy, protectionism. Speaking of protectionism, let's take a look at the dollar, because as we do have yields going higher, this supports the dollar going higher. In fact, the highest level going all the way back to 2020, which is really pretty interesting in a way, because that, of course, at that time, right before, actually, I'm going to back off of that language a little bit, but at the highs, the most since 2016. So another presidential year, each year, election year, this is the highest that the dollar has been. And again, that protectionist attitude from Donald Trump and his upcoming administration. If we take a look at some of the individual movers that all of you have already been talking about, DJT up 24%, the best day since it started trading on the NASDAQ. Tesla up 14.4%. Elon Musk, of course, a big part of the campaign, possibly some part in the administration. He could benefit from regulation around the robo-taxis, the AI infrastructure, and then banks. Shinali's been all over that. And then, of course, aerospace and defense. There's not a lot of corners of the markets that aren't doing well. Again, a big risk-on rally as Donald Trump is elected the next president of the United States.
And as such, of course, DJT currently halted for volatility. Abigail Doodle, thank you so much. The S&P 500, of course, your big benchmark, up in a big way, hitting an intraday record high. Let's broaden out this conversation right now and bring in Robinhood Financial Head of Investment Strategy, Stephanie Guild. She's with us now at the desk. Great to see you in person. So let's talk about, of course, the trading on Robinhood's platform. You have a really unique view into the retail trader, what they're trading, and looking at your platform, you had your biggest ever overnight session. What were people trading?
So I would say that it was BAU until the overnight session, and then it was the things that we've all just been talking about.
BAU?
Sorry, business as usual. So our customers.
I thought that was an ETF, and I was just wondering, what's BAU?
No, I just mean our customers tend to, trade winner, sell trim winners and buy things that go down, and they were doing that up until the overnight session, and then you saw a lot of the trading going towards the stocks we just talked about: DJT, Coinbase, Tesla. And we had our election contracts, which we were watching very closely. So we had 11 times the normal amount of volume overnight, and it is an overnight record for us.
Well, those election contracts also quadrupled pretty quickly, didn't they?
Over 400 million election contracts traded. And I will say that by around 9:30, it was 85-15 Trump.
So you knew by 9:30 pretty much. And we were seeing this really, I was seeing it across betting markets, watching a worksheet on the Bloomberg. Where did you see the most action in terms of assets other than stocks, right? Because stocks, I'm imagining, are the most traded asset on your platform.
Crypto, for sure. That was also a record. And then these election contracts were just like a unique, opportunity for our customer base.
And Robinhood got those out just in time.
Just in time, October 28th.
There you go. So it's interesting. You take a look at the knee-jerk reaction here. It seems like risk on everything, sell off bonds, sell off, of course, oil and gold as well. Do you think that that's the right play here? Where are we getting a little bit over our skis?
I think the one area of concern that I see is that the fact that 10-year is up so much and small caps are up so much. Like, those two things don't tend to go together. Small caps tend to have a lot of debt on their balance sheets. Yeah. And while, this is, I think, just a focus on the fact that Trump is a domestic president, a domestically focused president. And so that's obviously lifting small caps. They tend to be more cyclical in nature. And so that's why I think you're seeing tech not rally as much. But the one thing that I'm most concerned about is the fact that the 10-year is going up so much. Yeah. And I think that's going to be the single biggest issue for this president, is dealing with our deficit.
Well, let's put a little bit more color on that. The fact that you do have these two unsynchronous moves right now. Of course, the scream higher in long duration debt, but at the same time, you have these smaller companies ripping higher. Why doesn't that work? And which do you think actually corrects here?
I think it could be small caps that end up correcting here, because I see a lot of reasons why the 10-year should go up, especially with the fact that we have a $1.8 trillion deficit. And even if more tariffs come into play, like the Trump tariffs from 2016 time period, his last presidency, we made $80 billion last year from that. Like, that is not going to necessarily fill a $1.8 trillion gap. And so I feel as though if rates do not somehow pull back, and maybe a strong dollar helps that a little bit from an inflationary perspective, it just feels like everyone has to get their debt in order, including small caps.
I also want to talk about here the difference between the retail trader and the professional trader, because incredibly, if you look at the S&P 500 right now, you're seeing financials leading the market here. You're seeing the KBW Bank Index having its biggest gain since 2020. But when you look at what was being traded on the platform, crypto, that's kind of like anti-bank, isn't it, in some ways? Or, those bigger indexes, SPY, QQQ. That's even different from what you're seeing in the Russell. At what point does the retail trader take a cue from the broader markets, or do they want to do something else on their own?
I think, honestly, overnight, it was really just based on the election, like extremely election, Trump, Elon-oriented. I think what comes beyond that will end up being a little bit differentiated. I don't know about, we historically, if you look at like our Robinhood Investor Index, you haven't actually seen banks be a prominent piece of it, ever.
If you Google JP Morgan, people ask the difference between Morgan Stanley and JP Morgan still. Not joking. It's one of the top things that come up.
Yeah, but nobody who's involved heavily in trading, right? I mean,
well, the retail trader, how much do they understand the bank's trade?
If you digest financial news, then you aren't Googling that.
Yeah, you're not. But if you're trading and just getting involved in the market for the first time, I think you have to ask the question.
I think they're investing in what they know and what they see for the long term. And I think they see like banks will be here for a long time, but crypto is sort of a new thing. It has a lot of volatility. If you're trading on a regular basis, volatility can be actually a helpful thing. And that's what I think they see. It's all coming back to like electric vehicles and, again, those long-term things I think are not going to go away necessarily.
So I wonder, I'm not sure if this has changed by this point in the morning, but I heard Kriti Gupta, our reporter out of London this morning, saying that most major world leaders have called to congratulate Trump pretty enthusiastically, with the exception of China, Iran, and Russia. And I also noticed that, most stocks earlier this morning were up. European market has turned lower, but China was down. What do your traders make of, the Trump opponents like China? I mean, are they selling Chinese equities?
They're doing nothing with China.
Yeah.
I think the one aspect that they're probably, maybe they'll have to start to think about is the fact that so many of the companies that they do invest in are very global in nature and have a high percentage of their revenues coming from a place like China.
Right.
And so that's something that has to be contended with, and I think that's why you're seeing like NASDAQ up not as strong as other things.
Yeah.
But that's like generally I'd say that if our customer base is investing in the things that we saw them invest for the election and prior to that, then they're not really like caring about China at all.
Yeah, some of those investors might get a crash course in tariff economics, but I'm glad you brought up big tech because it is interesting and it's very early, but big tech is the laggard in this market. Of course, there's a lot more focus on areas such as financials, healthcare, more of those value-oriented plays. Do you think that that's a sustainable dynamic, or do you think big tech will come back?
Right now, it's probably a reaction to the China thing, but I actually think if the general rhetoric of deregulation comes to pass, and that is helpful for a lot of the large companies that are under pressure because they are so big.
Right.
Stephanie, great to have you in here. Great to get your reaction overnight and amazing trading on the Robinhood platform. 11 times your average and the most you've ever traded overnight. Makes sense after such an historic event. I just want to point out also that if you're looking at European stocks, I was talking with the group this morning about how interesting it was that everything was rallying, right? We saw U.S. stock futures up, but we also saw, with the exception of Spain, all European indexes rallying as well. This could be, though, pretty bad news for European companies, right? Especially if Trump really enacts tariffs, especially if you see a huge dollar rise over the euro and even the Fed reverse. Take a look at the Stocks 600, which is the broad benchmark index for European stocks. It has now turned negative for the day. After being up at one point to 519, we're looking at 509, so a pretty decent drop.
Yeah, it's interesting, and it sort of tracks with what we were seeing in the currency market, for example. The dollar has just been so dominant. We're now on parity watch again for euro dollar here. So it took a little bit for the stocks to get into sync here, but as you can see, those gains steadily disappeared, and now we're back to negative.
Now, maybe this is a minor point, maybe not, though. If the House does not turn completely red, then how stiff are those tariff policies going to be?
Well, tariff is one thing for which he does not need the House, right? He can enact tariffs as the executive.
Unilaterally.
Yes, and does not need congressional approval. What you need the House for, as far as I understand it, and I'm no expert on this, right? But we've been talking about it every day.
Yeah.
Exactly. What he needs the House for is obviously the tax cut package to extend those 2017 tax cuts and hopefully get rid of the SALT cap. And then he also needs the House to do, I think, any major immigration action.
Yeah.
We're going to continue to focus on this. Obviously, it's an historic upset, an historic victory for a candidate that faced probably tougher odds than any presidential candidate in history. Coming up, what happens to Elon Musk's Tesla and EV markets in the Trump administration? Well, today, the markets think this is a good thing. Maybe he bought some decent policy help from Donald Trump with massive, massive donations. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because you know, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Elon Musk
$130 million he threw behind now President-elect Trump will pay off. You know, the tension is in the policy platform, right? That most forecasters would say that the Trump administration will repeal or pare back or adjust the terms of the Inflation Reduction Act and other pieces of legislation that were designed to subsidize or incentivize EVs at the consumer level or at the manufacturing level. Contra to that is the idea that Trump wants to support manufacturing in the United States. If there's to be some policy adjustment as it relates to corporate tax, it will come with conditions tied to domestic activity. But the immediacy is like, Musk picked the right candidate, right? I think that's what the market's telling us, and yeah, we know.
You know, another interesting move in the market here, of course, is when you think about what Musk was saying, not just at Tesla, but how popular X was overnight.
Yeah.
One interesting move I see today is actually of the Mag 7 stocks. Ed, Meta is down today.
Down.
Is that a direct reaction?
Well, remember Trump's comments throughout this election cycle, specifically as it relates to TikTok and Meta. You know, the assumption, and again, I use the word assumption purposefully because we don't know the answer to a lot of this, but that Trump would be more friendly towards TikTok in this country and focus more on Meta. He's called out Mark Zuckerberg in that respect. X, really interesting. You know, the company puts out this data set that shows them that there are more Democratic Party affiliated users on the platform than there are Republican users. The company, when it comes to X, you know, it's been very influential. Musk has used it as his platform to talk about this election, right? What I can tell you is that the business is still not back to pre-acquisition levels. Advertisers have come back, but Musk is still actively involved himself in meeting advertisers to try and bridge some differences of opinion. But the advertisers, even if they're back talking with X, they're not spending in the same way. So that's going to be an interesting company to track, even if it's private.
Let's get back, of course, to Tesla and the EV space. It's interesting. You take a look at Rivian shares right now, down about
higher, right?
8%. No, Ed, they're down 8%.
Down, sorry.
They report earnings tomorrow, of course, but it just seems like a nice pair trade, of course. What's good for Elon Musk and Tesla might not be great for Rivian.
You're right, down, and I think I'm right in saying that maybe Ford was higher and GM modestly higher. I think Matt was talking about this with your last guest in the last segment. Look at the European automakers in that session being lower when at the index level, I think Europe had a decent session so far, right? Very hard to unpick what's going on. But again, the calculus is the same. There may be some repeal or pullback on specific features of legislation that are directly incentivizing to the consumer or the manufacturers. The main thing that most accept is that Trump will move to make American industry more competitive. And so Tesla may be the principal beneficiary of that. Then there's the unknown thing. I think we should say this out loud, right? Does Elon Musk being closely aligned with Trump and having some formal or informal role in federal government help Tesla's biggest rivals? Impossible to answer that question. I think that the market would say Tesla would benefit from those policies that we've just discussed and outlined. The EV market as a whole, maybe not.
Ed, we thank you so very much. We're looking forward to keeping up with everything you find out in the Musk universe. That is Bloomberg's Ed Ludlow in San Francisco. Now, coming up, we're going to talk about how hedge funds have been preparing for a Trump return. That's up next in our Wall Street Beat. This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the deflationary pressures and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's time now for the Wall Street Beat. Overnight, we saw a historic Trump victory, with Harris losing ground in critical counties and swing states compared to President Biden in 2020. The Senate is also going to be red. We're going to take a look at how hedge funds have been positioning for a Trump administration. Bloomberg's Hema Parmar joins us now to talk about it, because we were talking a little earlier about how that Trump trade really started infiltrating markets early into the night before you got all the voting data. You've just seen it accelerate quite meaningfully, particularly in bond and currency markets. When you speak to hedge funds really across the globe, I know your team has been, what are they finding?
Yes, so they've been really giving up, all hands on deck across the biggest hedge funds trading across all markets, fully staffed, and a number of funds were really double and triple checking their systems, making sure that they were ready for a spike in trading volume. When it comes to their positioning, there was a sense of being a bit more risk off. And from the people that I was talking to throughout the evening, by about 7:30, it was still kind of a mixed bag. People really didn't know which way it was going to go. Or people who did, there were multiple people with opposing views.
And talk us through the relationships between, of course, Trump, the Republican Party, and also Wall Street and some of the world's billionaires there. Bill Ackman comes to mind. Have to imagine some victory laps being ran today.
There's a lot of crossover between the Republican Party and big names in finance, of course, and in the hedge fund world. Bill Ackman, staunch supporter of Trump. You see that also in a number of other names. Ken Griffin, longtime Republican supporter.
But
not to Trump. Yes, precisely. Yes. He gave a lot of money, tens of billions of dollars to the party, but not to Trump himself.
Interesting.
We've seen that Steve Schwartzman, a big Republican donor. So you do see that across the board. There are some names that are up for potentially Treasury Secretary, Scott Bessent, John Paulson. So we're very, very interesting to see how that all pans out.
Remember, Bessent was the one that floated the shadow Fed idea, too, so that will be a big discussion in the coming days.
Right. I mean, we've had a shadow Fed before. I used to interview Alan Meltzer on this program all the time. Not this particular program.
Right,
but,
right.
Hema, thank you so much for joining us. We'll be fascinating to see how this works out for a lot of those hedge fund and how it works out in general for asset managers if you get the rollback in regulation that Trump has promised. Bloomberg's Hema Parmar there covering the Wall Street Beat for us. Coming up in the next hour, Ralph Schlosstein, Evercore Chairman Emeritus, is our special guest. We'll ask him his take on when Trump enacts tariffs, what kind of tax legislation we get, and also what happened. Why did the Democrats fail to win the popular vote for the first time, I believe, since the first George Bush? This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.